Good morning. I'll be with you guys shortly. I just need to do a few things. I'll be right back. This is your host, Cousin Vinny, coming to you from theclosingprint.com. It is 9:18 a.m. on the East Coast. It is Friday, FRY, Friday, the 10th of February. I'll be right back. I just need to accomplish a couple of things, take care of a few administrative tasks, and I'll be back. Give me like 5 minutes. Good morning. Good morning. All right, so futures are coming off the absolute lows of the morning. We've gained quite a bit, actually. We're up to 40.76. We were down near 40.60 pre-market. Still pre-market. Got a couple of minutes to go. 2 minutes to go for the opening bell. Interesting reading headlines. Of course, everyone knows that headlines are written so that you click on the links and read. So they're going to give you the dire straits, so to speak. My favorite quote was, "This won't be the worst week of the year, but it'll certainly be the first." In response to some headlines that worst week of the year, and this particular person was going on and on about what was it? Ukraine, inflation, debt ceiling, politics, and China. And the people who responded to this perm bear were were pretty funny, actually. You get a 3% pullback after an 18% gain, and all of a sudden the world's coming to an end. All right, you can see the candle here. We had a similar one in the second week of January right there. We followed through and then bounced the next day back above the 921.50 day. I'm not saying I have a crystal ball, I know what's going to happen, but we did start hedging yesterday. So maybe take some hedges off at the open. We got less than a minute to go, so we want to do that quickly. All right. Let's see what the markets do here. Any bounce, I'm looking for rejection and look to reshort. Okay, look to reshort. Let's see if they find this level attractive enough to buy. Right now, shorts are covering, shorts covering. Okay, so first 15 minutes, I'm not doing anything except taking profits off the table. That's a good idea. Let's see, what is SPXU doing? SPXU coming back a bit. All right, SPY is gaining. SPXU, small hedge. I took profits. Not a day trade. I will be considering a potential re-entry if the markets fall apart, but I just took it off. See if there's a major move here. Okay, so a lot of stocks bouncing. Good morning, everyone. It's amazing. The first time we get a decent pullback candle this year, or actually the second time. First time was the third week of January. We had that big red candle right there. That red candle right there. And then we had a doji spinning top, 3 candle reversal back above. These are all bullish indications. Looking for a continuation. Okay. We'll see how far the markets can move here. And then we'll reassess around 10 o'clock, 10:15. It's a Friday, so I'm not expecting a lot. Generally speaking, I like to take profits into strength on Thursday, Friday, having short-term swings perhaps during the week, coming in on Monday, assessing the markets, and then look for Tuesday, Wednesday, Thursday for decent positioning. In this case, this week we've been chopping around. Okay, so we've only had one really bullish day. That was Wednesday. Monday and Tuesday were down days. Looking for a higher low. All right, get everybody bearish on run to the bearish side of the boat on 1-3% pullback over the week. All right, so we're still rallying here. Markets are still pushing higher. And the one thing I was looking at across many stocks, not just the indices, but one thing I was looking at last night was what I talked about yesterday. This anchored VWAP and where price action is. What I'm particularly interested in is TTM in the bottom panel. Those dark blue. If that starts to drop more, that would indicate that I want to stick with my hedging idea. If we start to see a cyan bar today, that'll be because of price action. Okay, so it's not a complete sell at this point because we're still making higher highs and higher lows. NYMO, let me just check NYMO real quick. Order flow, by the way, on futures is higher. Okay, we're at minus 57 on NYMO, so we might have given back enough for the markets to bounce. A bit more. Left to be seen. I don't have a crystal ball, neither do you. Despite what people think, they can't predict the markets. You might be right in your prediction. Markets might move in your favor, but over time, it's really hard to predict what the market's going to do. So all we can do is ride the trend. Expect that we would see trends lead to consolidation. All right, we can very clearly see these two trends. Okay, I talked about this yesterday. Just waiting for the markets to settle down. Hedges, if you took longs from the open, good job. All right, so you got these legs up. Okay, these legs up. Okay, these lead to consolidation. Gains lead to consolidation. Okay, and we got consolidation here. So how far we go, I don't know. Over here was a very quick reversal because we hit the 200-day. That was the first time we came up and tested the 200-day back in August. And if you read the morning blog post, realized volatility and implied volatility were acting opposite. Whenever that happens, we tend to have a pullback. We had that in August, and we have it in the current situation. So we're looking for this to follow through, knowing that they have this leg where we're gains. We're making nice gains. We're making nice profits, buying the pullbacks. And at some point, after an 18% gain from October 13th, the powers that be decided, okay, let's take some profits and let the markets consolidate, get everybody bearish on the street. And then they can start buying again. If they start buying again, we'll know it. Okay, Apple is off. Trying to bounce. Okay, Netflix bouncing. All right, all I'm seeing right now is shorts covering. Tesla only off $1.15 at the moment. Not too bad. Let's go see what sectors are working. We want to focus on the sectors that are strongest. Okay, strongest sectors are energy. This morning, there was some conversation about Russia, the Saudis not stepping in. I would imagine that the Saudis won't step in until crude prices start to rally a bit. Um, they did turn. Okay, let's take a look at crude oil. Brent was down coming into this week and then bounced on Tuesday, Wednesday, Thursday. We're consolidating. This is Brent crude making higher lows. All right, SPY fading a bit right here. SPY fading a bit. So we're already running into some resistance at 407. SPXU starting to bounce. Healthcare. Healthcare is on the move. XLV is on the move. Check out XLV. XLV is on the move. That's a defensive sector. Okay. Doesn't look very promising on the daily, but look at intraday. Intraday, we're starting to rally off the low. Okay. How low do they want this to go? It's near the 200 day. Still has potential for downside. So check some of the individual names that Mr. Flood and others have been trading, like United Health, Humana. Those are all reversing. Merck, I noted Merck last night. I was checking out its TTM. Histogram was pointing to more upside potential. Merck. Okay. Eli Lilly, same thing there on Eli Lilly. Okay, healthcare. Healthcare is leading. Watch those stocks. It's a Friday, so I'll be doing a bit less. Yeah, brother Bill, I know you're in a good mood because Kansas City is in the Super Bowl. All right, looks good. All right, so SPY is pulling back a little bit more. All right, so if we just start selling like crazy, looking for these bounces to short. Right now we're testing pre-market lows were much lower, down near 404 and change. Okay, the dollar is at 103.35. The 10 years at 3.69%. It's about 1 basis point off the low. And VIX is at 21. So we're expecting volatility to pick up. That seems to be the case at the present time. All right. Tesla. Tesla's been on the run lately, been moving higher. So for Tesla to give back a little bit doesn't surprise me. I'm not in a hurry to try to guess what the market's going to do in the next hour, next half an hour. OSCR. All right, let's take a look at OSCR for David. OSCR. That symbol rings a bell. Oscar Health. Yeah, it looks good for a penny stock. Volume there, David, looks good for the past couple of weeks. You can see institutions appear to be buying some shares. They do buy these from, small positions, but looks pretty good on the move. Just check earnings dates if you take it. I'm just going to wait a little bit longer, being it's a Friday. Just plan on waiting a bit longer on a Friday. Okay, XLV continues to push higher. It doesn't look that great on the daily, but the 2-minute, 5-minute charts are looks like shorts covering. Netflix a bit lower today. Netflix. All right, so we're making more new lows here. All right, so let's see what's working. Dexcom up 10%. That has to be on earnings. All right, Dexcom had earnings last night. It's up today. Dexcom revenue growth of 16.8%. Estimates were 26 cents per share. They came in at 34 cents, an 8-cent beat. They beat by 8 cents. Dexcom's higher, breaking out of a descending channel back above the 50-day, so that's a good one. Dexcom, as you know, designs, develops, and commercializes continuous glucose monitoring systems for ambulatory use by people with diabetes and healthcare providers in hospitals for the treatment of both diabetic and non-diabetic patients. Dexcom, okay, healthcare related stocks bouncing, XLV continuation. I haven't pulled the trigger on anything this morning. All right, SPY with a nice bounce here. All right, shorts covering, SPY, shorts covering. Nice bounce. Shorts covering, Netflix reversing. We're seeing stocks reverse. Okay, FANG stocks looking for shorts to cover. Seeing signs of short covering on Apple. Okay, of course, Apple in its most recent report, revenue fell 5.5%. The estimate was for $1.93. It came in at $1.88. All right, so they missed by 5 cents. You all know what Apple does. Okay, Apple potential scalps here, bouncing off the 9 EMA potentially. Still think it's a little early to do anything. It's 9:46 on the East Coast. All right, already starting to get rejected there on that little bounce. All right, SPY. Very possible that we put in a doji, a 3-candle reversal starting off Monday with a bounce. That's a guess. Okay, I have no idea. I don't have a crystal ball. But if this turns out to be a doji day and we stay down here, still early. Okay, doji right near the 21 day. Markets are bullish. This is in a bullish uptrend. We broke the downtrend. If you look at the morning blog post, I had a nice chart of the S&P and the trend break. Okay, this is a stock charts version, but that blue line, obviously, a trend break right near the 200-day. We're coming back to the 21-day. That would represent a 236 in between the 21-day and the 50 days, about a 236 Fibonacci. You can see 382 over here, right there. 382 would be a move back to the 200-day. That's completely possible. Mhm. So the idea is taking money off into strength last week. This week, that proved to be the right decision. We moved lower on Friday, and then, of course, we started off the week with a another drop, a pop on Tuesday, and then a follow through to the downside Wednesday, Thursday, Friday. So right now, I'm just sitting here watching. Okay, if you are a long-term investor and you're getting ready to put money to work, just wait for the markets to give you a bullish signal. What I'm watching right now is the bottom right-hand corner, what TTM is saying on the daily time frame for the S&P. Presently dark blue histogram bars. I look for that to turn cyan, or best case scenario, we start to see red to yellow transition, and you get that nice trend into cyan. Right now, I'm just watching. Okay. Okay, so PayPal, we were waiting for earnings. Thank you, Joel, for reminding me. PayPal, good earnings. Yeah, look what Amex did. American Express. My guess, Amex followed through. So look at PayPal, look at Amex, and then that's AM. Why can't I remember this? AXP. Mind, that brain cell must have died. AXP still following through. Bullish follow through after earnings, that big gap up. So PayPal showing a nice bounce. With earnings out of the way. All right, let's take a look at PayPal real quick. PayPal. PayPal reporting a beat of 4 cents, revenue growth of 6.7% year over year. Don't they have a Cash App type of application like some of the others that are out there? I think they do. All right, PayPal. Watching PayPal. Let me see. I might start something with PayPal. Okay, PayPal has an ATR of $3. It's up 4.25. So we're right at the 200-day. If you're impatient and buy too early, you might experience some pullback, but it does look very strong. Looks like shorts covering. Okay, if you scale in uh, at this point, my thoughts are that this could pull back to 80. So, if you start a position with the expectation, okay, I want to get in case it keeps going, probably won't, but if it keeps going above the 200-day, you could scale in. Let's say you're going to take 100 shares, maybe you take 25. If it dips, you take another 25. Gets down to the 21-day and starts to bounce, then you can add the remaining 50 shares that you wanted to have as the position to begin with. That makes any sense? Or you can just wait. Or you can just wait. There's no hurry. It's a Friday. They did come out with decent earnings. Let me just check a few other things. PayPal shorts most likely covering here. Fast graphs. Let me see what earnings look like. What does Seeking Alpha have to say? They have some good writers at Seeking Alpha that manage funds. One of the reasons I like Seeking Alpha is because there's a lot of fund managers that write for PayPal or for Seeking Alpha. All right, PayPal's got okay, it's got a hold. Quant has a hold, but Wall Street has a buy. Valuations are a D, growth is a D, profitability is an A plus, momentum is a D, and revisions are a C. All right, so PayPal is aiming for a massive turnaround in its adjusted EPS growth before Schulman hands over the mantle to leadership. All right, so we might see something on PayPal. All right, let me take a look at a few other things. PayPal. Should never be in a hurry to take a position, especially if you're obviously a long-term investor. If you're scalping, you're looking for these little moves in the spiders. PayPal just watching price action right here, a little extended, looking for it to pull back towards VWAP. If this doesn't pull back too far, and we keep seeing VWAP up and to the right, and relative volume continues to ramp like it was like it is today, referencing yesterday, much higher today. All right, let's see, PayPal, PYPL is trading at a discount to sales, is trading in line with earnings. So PayPal is trading at fair value. Free cash flow is trading at fair value to free cash flow. All right, so we got a new management coming in. So most likely there'll be reasons to think that this will follow through. PayPal versus EBITDA. I don't know if you would analyze these the same way you would banks, because I know banks that you want to analyze them versus book value. PayPal does give us an EBITDA number. Okay. Good earnings. An earnings beat. Okay, so let me show you what I'm looking at here, Joel. Okay, sorry. All right, starting to consolidate right now. So watch for a potential pullback in PayPal. It's more than 100% of its ATR already. All right, here's PayPal, Joel. Here's PayPal. Okay, you can see it's trading at a discount to EBITDA. It had an earnings beat, new management coming on soon, and trading in line with free cash flow and operating earnings, basically fair value. So that looks pretty good if you're thinking about trading or starting a position in PayPal. Also consider all right, so PayPal is in fact coming back in a little bit. Watching PayPal. Okay, Google, just out of the corner of my eye, just saw Google bouncing. Okay. Netflix is at the lows. XLV continuation. PayPal's up 3. ABC. Amerisource Bergen. Bouncing. Amerisource Bergen. All right, PayPal pulling back in a little bit. Okay, wait a few more minutes. It looks like if you wait a few minutes, you might get a better entry on PayPal. That must mean had the same thoughts, Corey. Yeah, Google had the same thoughts. Jeffrey's coming out with a conviction buy list, price target of 130, upgrade. All right, that makes sense. All right, PayPal still pulling back a bit. Wait for a bounce. It's at VWAP now. Okay, Merck following through, having a nice follow through, and Merck. All right, so if you took Merck earlier in the week with Susie and others, you got a nice pop there on Merck. It's above. It's been having difficulty at the 21 day. This will be a third day dealing with the 21 day if this pulls back from here. The 50 day is right overhead. You could reach up and touch it. Merck looks good. All right, Qualcomm. Qualcomm, I've been wanting to start a position in Qualcomm, but I keep forgetting. I don't want to take on too much risk, especially with the markets consolidating. Qualcomm coming back. The breakout zone's right around 126, 127. The 200 day is right there. So really, there's no hurry. Unless this turns out to be a hammer today, I'd be looking for 2 bullish days. So if this turns out to be day 1 on a bounce on a Friday, then I'd be looking for Monday to be a bullish day to get into Qualcomm. Let me just check a couple of things on Qualcomm, but no hurry there. Qualcomm. Yeah, so its TTM is telling you to wait, looking for a higher low. Okay, waiting for that to get back down towards the 0 line on TTM. SPY pulling back. All right, SPY range bound for now. At potential doji, we got VWAP right there at 406. If this drops off fast, 404, 404.25. There's some pretty big levels down there. Okay.
Tick alert minus 800.
Okay, looks like we're going to drop off here. Okay, pushing a little bit lower. SPXU moving back up. PayPal pulling back a bit more. Okay, SPY. No Woody. What's going on with Woody today? I did note that Bloomberg was talking about CPI is going to be up probably 0.5%. It was down 0.1% last time, CPI. So they're expecting 0.5% rise using their data.
The dollar after Michigan confidence data last down 0.5% at $1.06. The Nasdaq 100 drops 1% to session lows.
Michigan consumer sentiment forecast 65, actual 66.4. Michigan consumer sentiment. Let's go take a look at that real quick. Michigan consumer sentiment. We've been following that as well. Its previous was 65, as you can see. Okay, 64.9, 65, rounded up. Oh, I'm sorry, 64.9 was the previous. Forecast 65, it's up at 66, so it's still climbing, All right, so it looks like shorts covering here. Okay, consumer sentiment picking up. Actually rising, all right, so that's good.
The US dollar cuts losses versus the yen after the Michigan data.
All right, so ABC, AmerisourceBergen taking off to the upside. ABC on the move, mentioned it yesterday. Netflix at the lows of the week. Netflix. All right, Apple, SPY. All right, looking for a follow through and a bounce here. All right, SPY. So I'm still thinking today is going to be a doji day. I don't think anybody's going to win, the bulls or the bears, unless we start to see this drive higher off the 21 day. That was a likely area to find some buyers. But TTM is still telling us to be cautious. Dark blue bars tell me to be cautious. If it was cyan, that would be a different story. All right, consumer sentiment. All right, so we saw that. Let's see what the number of bulls and bears is saying. By the time the bears wake up, more and more are continuing to capitulate. We got a nice rotation here. All right, nice bounce here on SPY. Okay. Looks good. Nice job. Thank you, Easy. Yeah, AbbVie yesterday looked really good. It gave back all of its gains. Back inside. That's telling you there's buyers, active buyers there. That looks good. Okay, AbbVie, I like it. I like it too. Easy. All right, wait for a little dip here, perhaps. A nice follow through in SPY. Okay, SPY, nice follow through. All right, let's see how far we go here. All right, SPY. Calls for Monday, maybe. Let's see. We're at the 200 EMA right now. Let's see. Monday. Monday. Dun, dun, dun. Dun, 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 dun. All right. Watching SPY for potential follow through. All right, still early. Netflix. SPY is about to go on a buy signal. 5 minute 5 minutes about to trigger a buy signal. That's still early. It's just shorts covering. Nothing to write home about yet. Oscillators on the 60-minute are way oversold. Same with the 30-minute. So I'm looking for a bounce. Apple might be a nice entry on Apple's about to trigger a buy signal on Apple for a reversal. Apple. And then all right, see if we can get a follow through here. Apple, it's trying to trigger a buy signal on the 5-minute chart. Apple. Apple is triggering a buy right here. Apple's triggering a buy signal. Okay. These are scalp signals. All right. So these could easily reverse. So just be aware of it. If you don't know what you're doing, maybe sit it out and wait for Apple to give us a better signal. All right. Right now, I'm just watching for a buy. Looking for that buy signal. Apple's triggering a buy signal right now as we speak, looking for a follow through. Apple. Okay, if the markets can manage a follow through and continue here, that might be valid. Right now, I'm just watching it. It's Friday, so Fridays are usually pretty slow. This starts to rally hard. That would be something we'd need to see.
ECB Schnabel says policy has had little effect so far on inflation.
Apple. Mm. I'm watching Apple for a follow through. The 152.50 call for today is 15 cents.
ECB Schnabel says longer term inflation expectations are largely anchored.
All right, Apple, the 152.50 is a 15-cent call. Starting to move now. Apple's starting to move. Okay, watching Apple.
ECB Schnabel says China reopening is likely to be positive for inflation.
High took alert plus 800.
All right, starting to move pretty quick here.
ECB's DeCos says markets are interpreted ECB's decision well last week.
All right. So we're sitting here on Doji, looking for the follow through and SPY, Apple. Okay, so SPY looks good. Let's see if Apple goes, Microsoft goes. That would help, obviously. Apple, 2 minute. We need to see Apple take off to the upside. It's like every other post is a meme. I guess that's the new generation.
Just taking a look at the Fear and Greed Index. 70 out of 100 signaling greed, and the Crypto Fear and Greed Index 40 out of 100 signaling.
There goes Apple on the move. All right, so we're already up almost 10 cents on those calls. All right, those calls are starting to inflate. All right, so good job there, folks. Okay, let's see. PayPal? Yeah, it looks good, Grover. Nice. Nice, nice, nice. Mm. All right, SPY. Let's see if we can't get a follow through here and a push towards 410. That's looking pretty good. There's always a possibility that they try to get the bulls to bite, okay, so to speak. Do bulls bite or do they chomp? What do they do? What do bulls do? Anyway, if we get the bulls to bite, there's always a possibility they could smack it back down, start selling like crazy if they think that CPI next week is going to be too hot. All right. So what I'm thinking is that if you look at the histogram on TTM, nothing's changed. It's still dark blue bars. Okay, that's telling me to be cautious. We are right above anchored VWAP. NIMO has improved from minus 57 to minus 46 intraday. All right, so this is not going to be like all of a sudden we turn bullish. It's going to be a battle more than likely, I'm thinking. Apple is on a buy signal on the 5 minute. It's trying to trigger a buy signal on the 30. Let me go to the 15 minute. 15 minute, Apple is almost on a buy. Oscillators are turning up.
ECB Schnabel says the return of low
Oscillators are turning up.
baseline.
That's true. True. All right, SPY continuation. I mean, if you looked at the headlines I was looking at, if you look at the headlines I was looking at this morning, it was pretty dire. You'd think a 3% pullback, the end of the world was coming. You know, it gave the bears the opportunity to say, "See, I told you so. The markets are going to drop, and we're going to make, you know, that 25% drawdown to the October low look pale by comparison." I mean, there were some really crazy comments out there. You don't know that. You don't know what's going to happen. Yes, CPI comes in hot. They still haven't figured out. They still haven't figured out why employers are holding on to employees. The JOLTS number. Even Powell mentioned the JOLTS number. I don't know if you guys caught that comment he made about the JOLTS number. There is still a lot of job openings, even with the high uh, retention rate, something along those lines. It was a positive for the markets. It's basically what I got out of it. Maybe I read it wrong, but sentiment. I mean, if you keep looking at sentiment, where do bears start to capitulate? They don't do it at the highs, right? I mean, this is a full on turn. This is over the last 2 months. This has really made quite the turn. Okay, doesn't mean it's all over with just yet, but it's definitely something to consider. That the bears are capitulating. More bears capitulate. I'd rather be buying the markets as they turn coming into the higher low in December into January, obviously hindsight, but when this indicator is turning higher, it's telling me that even though there's a lot of bears still out there, the majority of people are still bearish. We are turning like 1990, which was one of the longest bull markets I've ever traded, up to the 2009 secular bull market. I mean, that was 10 years. Imagine a market trending for 10 years from this point. People will scoff at the idea, but I mean, we already had a 25% drawdown. Is that enough? You and I, none of us know. We don't have a crystal ball, but all I can tell you is what sentiment says, what the Michigan Consumer Sentiment says, counterbalanced by industrial production. Obviously, industrial production is backing off. Now, keep in mind, industrial production back in 2014-15, that peaked a full year before the markets rolled over in 2015. All right, so I'm just watching the markets right now. I just want to show you this comment here. Here's 2015, okay? 2016, the end of 2015, mid-year 2015, we rolled over. Mid-year 2015, and the inflation was 2% at that time, but that's the rollover in industrial production. That was a year before. August the year before rolled over, so that's still possible. Still possible. But I keep thinking about that 25% drawdown to date, and I keep thinking about the number of bulls and bears, and just form my own. I don't want to use the word opinion, but form my own analysis, devoid of what Wall Street says I should be thinking. I want to use my own intelligence to determine what I should do next, right? Yesterday, we bought some SPXU at the close. We thought that if there was a major drawdown, we would cushion ourselves. I did take that off. I said it wasn't a day trade. It's still not a day trade. Although technically you could say that, it was a 1-day swing. But I'm still thinking that I might need to add that back. So that's in my strategy, in my game plan, that if the markets do roll over and they slap it down, they start selling like crazy, volume picks up, then I have my go-to is XPXU and potentially some puts, but I'll only take puts on a bounce. So right now we got a pretty decent bounce. If you took calls at the low on the Michigan Consumer Sentiment number, we had a nice reversal candle. Volume came in. We moved from 405 up to 407, 408 very quickly. Within 30 minutes, we went from 405 to 408. 3 points on the SPY. That's nothing to sneeze at. On a normal day, that's a good gain if you took calls down there. So I'm just sitting here and watching what the markets are doing. We do note that healthcare, if you have a favorite healthcare stock, financials still look good. Financials, right? Financials are weathering the storm fairly well. We're back down to the 9 EMA, 21 day today. Yesterday was a 9 EMA, today's 21. Do I know if it's going to go down the 50 day? I do not, but it would still be a bullish trend if we bounced at the 50 day. Volume was above average yesterday. Some of the financials like Jefferies holding up better. Raymond James Financial, not as much. What's Charles Schwab doing? Broker dealers. All right. So in the weekend video, I talked about Charles Schwab and IBKR. Okay, IBKR was looking better, and it continues to look better. But Schwab wasn't looking bad either. I said that if it got above the 50-day, you might have a valid higher low, higher high. Still have that perspective that if it does stay above the 50-day, that next week this is probably going to test 86. So that's Schwab. Let's look at the big regional banks, money center banks rather. Goldman Sachs looks good. W-shaped pattern bouncing near the 21-day. JP Morgan. I know John is in JP Morgan. John, one of the new members. I think you've been with us a couple of months, right, John? 2-3 months. Bouncing at the 21-day. I like it. I'm looking for JP Morgan to follow through. Look at the weekly. Okay. As long as the weekly 10 EMA is rising up and to the right, that gives you a good risk reward. All right. Let's say worst scenario, we take out the 10 EMA. That's only 3 points lower. Can you stomach 3 points downside if we can see more than 6 points, 2-1 on the upside? I definitely see at least 165, 166 if this trend continues. I wouldn't use the weekly for a stop. I'd be using the daily. Daily, I'd probably take a stop. Probably if it lost the 50-day. So that would be what, 135. Okay. Yeah, so that's 4 points. All right. So the markets look okay. SPY's hanging in there. SPY's hanging in there. We're still above the 10 EMA weekly. We broke above the December high. Now we need to get above that August high at 428. That's going to take a few weeks if this continues. If they buy here, trap a lot of bears. I mean, seriously, if you read some of the articles I read this morning, it's like, man, there's some really serious conviction out there on the bearish side. Okay, Apple pulling back to its buy signal on the 5-minute. 5-minute tends to be more noisy. 15-minute tends to be a little bit better. So we don't have anything on the Apple on the 15-minute yet. That would trigger right around 152. So Apple needs to continue this path of higher highs, higher lows. AbbVie, nice higher high, higher low. Joel, what do you want to look at? You wanted to look at PayPal? I thought I did. I thought I looked at PayPal. PayPal. Okay, a little fade right there at the 200-day. ATR is what was it? $3. ATR was $3. It's up 347, so it's 100% of its ATR right now. 309, a little bit more than 100%. So you could stand to wait a little bit longer if you can get a better entry. If it gets back above the 200-day, that'd be excellent. The healthcare stocks look a little better. So if you're trading healthcare, AbbVie back into that wick. Had some sellers in here yesterday. It was like, wow. We made it all the way up to 153.70, and we came all the way back down below the 21-day. Now we're above. So that's telling me there's still buyers in here. 12.5 million shares traded hands yesterday. That's pretty interesting. AbbVie has the 150, 250 calls trading pretty heavy here today. Let's see, AbbVie, the 152.50s. We got 17,000 in volume on the 152.50s AbbVie for today. Wow. Those are 15 cents. SPY, a little rejection here. All right, Apple pulling back into its buy signal area. Higher highs and higher lows is what we're looking for. SPY. All right, so if we roll over VWAP, this would be a good area to think about puts. If we do roll over, 408, 408.84, that's 200 EMA. All right, so when we get extended from the 200 EMA, the gold colored line, I do look for mean reversion most often. Okay, we got 17,000 contracts volume on today's 152.50 call on AbbVie. Yesterday it was up in that area. Looking for higher lows and higher highs. If SPY can catch some legs here, that would be refreshing and more confirming.
US seeks critical mineral pacts with Japan and the UK to curb China.
All right, let's see how far we go. AbbVie is starting to move now. AbbVie is starting to move. All right, SPY's starting to move here. Okay, SPY. You can see the wicks on the top of these candles all along 408. So there's some sellers right there. Apple needs to bounce. So does Microsoft, Google, the rest. Microsoft making higher lows on top of VWAP. All right, kind of a stalemate right now, right? Markets don't feel like they want to go anywhere. People will start to get impatient and start selling if we don't follow through. Momentum traders looking for a quick buck. If we don't get any kind of follow through here, they'll start taking profits off, or they'll start taking positions off. PayPal. All right, PayPal. A nice little dip on PayPal. So when Joel mentioned it, it was trading right up here near 82 and change. My thoughts were wait for the dip to buy. Well, you got the dip to buy. Now, what happens next is very important. Watch the relative volume. If we continue to pull away from VWAP the rest of the day, we're already up 100% of its ATR, but average true range. So left to be seen what's going to happen here. Most charts showing ambivalence right now. Netflix making a new low. Netflix making a new low. Okay, so I'm watching the markets. PayPal. Let's see, AbbVie. AbbVie just sitting here, flat VWAP, might not go anywhere. Can't imagine a trader would want to, well, maybe they want to get assigned. Sell the premium, but that was pretty small. The 152.50s are going for what? They're 7-8 cents. I can't imagine someone taking that position, thinking that anything other than a quick pop and make some bucks there. So watching AbbVie trading at 7-8 cents, 152.50 calls for today. If we bounce and start to follow through, high of the day 152. Okay, be prepared for downside if the SPY does roll over. So far, just pretty sleepy market. SPY still on a buy signal. Back to VWAP, bouncing, SPY. All right, Boeing's on the move. Boeing is taking flight. Boeing's on the move, back to the high of the day. Watch Boeing here. BA. Looking for push higher. The last couple of days, this looked pretty good. Looking for that breakout. Looking for that elusive breakout. The thing with Boeing, the number of contracts this company has put together is just mind-boggling. They're hiring 10,000 new employees. They let go some people in finance at the same time. That was mentioned during the week, I believe. Boeing is producing cyan colored bars. That's telling me that the highs that we're seeing may not be, may be taken out. Okay, we might take out the highs, break out of this consolidation. Okay, so we've been consolidating 1, 2, 3, 4 for a fifth week. So a flat base. So the strategy is on a flat base is to take a breakout long, obviously, and a breakdown below 203 as a short back to the 50-day. Boeing has a lot of catalysts. I don't have to repeat them ad nauseum. You've heard them over the last several months. Since November, the Consumer Investors Day incited a lot of buying by institutions. And since then, the company continues to repeat the same mantra. They're adding contracts, they're adding clients, they're adding employees. They're trying to execute. They came down from 8 divisions down to 4 divisions, getting lean and mean. And you don't have to go back too far to know what I'm thinking about Boeing, where it came from, and where we potentially could go. I don't want to be buying at the high over here. I want to be buying at the lows. That's where we were buying right in here in November when we started to move above the 10 EMA. 10 EMA is rising. Weekly is a little bit more clear. Okay, if we continue this path, the 10 EMA keeps rising. There's a lot of reasons to believe it will. Momentum is clearly bullish. Look for the breakout and look for maybe a 50% move back in the opposite direction. That would be around the low 300s, I believe. But presently, it looks like it's back to the top of the range. So nothing there yet. Apple looking for a higher low, looking for buyers to come in. I don't know. I just got a feeling people are going to be disappointed today. SPY's not going anywhere. Got a doji day. Looks like we're just going to sit here in a doji spinning top. Now, if we take out the 21 day, I'd become more bearish and I would start adding back my SPXU. So know what my game plan is. 405 is a line in the sand. If we drop below 405, I'm going to hedge again, keep my hedges on, look for 400 test or 395, the 50 day. I hope that the bears show up and this higher lows continues to head towards a higher high. 420 is the upper range. And that, if you looked at the Gamma channel this morning, 420 was the largest strike. And that has diminished somewhat. 410 became the largest strike again. Call wall overhead. So it was a peak at 410. It looked like 420 was going to be the place. Puts are forming along 405. Okay. So range bound, we could test 405. We could test the high of the day as well, 408. Flat VWAP. Right now, it looks like they want to test the low part of this range. All right, here's flat VWAP. We could test 405 and still be in a flat VWAP. Doji spinning top. So look for 405 potentially here. Apple fading. No go on Apple. No follow through on Apple. Let's go take a look at sectors again. Sectors. We're about 65% red, 65% red, 45% green, or just use 60-40. That's easier to understand. 60-40, which we're seeing being led by energy, crude oil, small caps, large cap energy. Utilities, healthcare, and consumer staples are higher. Those are defensive sectors. They've been lagging lately. If you look at XLP, it's been below the 50-day. XLP has been below the 50-day and the 200-day. Now, I'd like to see all sectors firing and pushing higher. That would be bullish, but XLP is starting to bounce. It's below the 50-day. XLV didn't look much better. It's been a descending pattern. It's below the 50, the 9, the 21, and it looks like it's headed to the 200-day, but there's some stocks therein that are bouncing, like Merck. Merck is above the 21-day, so possible we test the 50-day. Merck. Other healthcare stocks like UNH, I know Brother Bill's in this one, or thinking about it. Or in addition, I think, or maybe it was Farmer Jim. Farmer Jim, I think you're looking at this one, right? And Mr. Flood. And looking at these, Humana, United Health, no follow through yet. So that's healthcare. And then you've got utilities, XLU. That's been fading. That's in a bearish trend below the 920 50-day and 200-day. Oversold a bit. All right, SPY could just squeeze the life out of just out of the money options here. Okay, keep in mind what the ranges were for this week. 404 on the downside. That was the expected move for the week. 404 and 4468 and 420 was the upside. Okay, pulling back.
Alert minus 800.
One standard deviation bands give you 404.68. That's what we were looking at for the week. All right, so if you've been watching what we've been doing, weekly video, I do it for my own reasons as well. There's your 404.68. That's the expected move on the downside. 420, we got close to that. 420.02, 404, we got close to that. I believe we got very close to it pre-market. All right.
Low tick alert minus 800.
All right, VIX back up to 2143. Okay, Bulls may have to wait until the evening session to do anything. Markets are just sitting here chopping around. XLB Materials, there was talk about Freeport McMoran yesterday. And I forget who else. What was it, Rio? Let's see, Freeport McMoran and Rio yesterday. Rio Tinto. Copper, with China reopening, that there's a possibility we'd see demand in this rising. Okay, copper, you can see yesterday bounced. So the comments yesterday had to do with China reopening trade. So that looks good. All right, Boeing off the highs of the session. Not surprising. A lot of stocks are range bound. I'm not really interested in trading ranges. I want to see some trends develop. So if we bounce today, follow through on Monday, that would be a good sign for the markets. I really don't feel like trading inside of this range right now. I'd like to see a follow through next week or a resumption of this downtrend that started last week on Thursday at the high, 418.31. Either way, we'll know whether we need to hedge, reduce risk, or if we can put risk on. Speaking of risk on, let's see, IWM. IWM had that 200 level that needs to be taken out, the 200 level right here. That's August high. NYSE got above the August high right there, August high. Over here, we moved above it. We're back to the 21 day. We're making higher highs, higher lows. We keep testing the 50 day. When the trend starts to strengthen more, you'll see fewer tests of the 21 day, much less the 50 day. So if we can stay above the 21 day, that would be bullish. If we come down and touch the 50 day, it just means we're still in the early stages of potentially following through in a bullish trend. I'm not a perma bull. I'm just stating the obvious. There are things that are happening that take a while to show up in the markets. Yesterday, who was it? Somebody was talking. Rick Santelli was talking about the money supply, M1, M2. All right, sentiment's becoming better, more bullish. M1, M2. Money supply coming in. All these things you need to consider. Or you can just invest in a hedge fund or in a ETF and be done with it. An index fund. Let's see, what do I want to look here? Currencies. Okay, M1, M2. He has a different graph. This is M2. All right, so we're starting to bounce here. Back above VWAP, not surprising. Watch Apple. Apple's holding up very well. Look for Apple to follow through. 30-minute, 15-minute, 60-minute on Apple are oversold. Those can turn up. The oscillators could show more momentum potentially for follow through on the longs. SPY, still a doji spinning top. Again, this is the fourth day this week, maybe 5. Expending a lot of mental energy just trying to figure out what the markets want to do. I'd say a move above 407, 408 would definitely give us more lift. A move below 405, I'd be looking for a test of 400. I like those bigger numbers. 50 handles on the SPY or the S&P 500. I'm going to take a quick, I'm going to pop my head outside and get some fresh air. I'll be right back.
Flight of Starship. That's the spacecraft built to transport people to the moon and Mars. In Texas yesterday, the company attempting to ignite the 33 engines of this massive super heavy booster that's going to power Starship marks the first static test fire of what is poised to be the most powerful rocket ever built. 31 of those engines fired up enough to reach orbit. And earlier in the week, SpaceX President Gwen Shotwell had said that if this was successful, which it was, that there could be a launch as soon as the next month or so. FAA certificate, launch certificate is still pending there, but certainly a big milestone for the space industry. Nonetheless, Tesla's trading lower today. In general, mixed picture for the major averages. That's going to do it for us here on Squawk on the Street. Tech Check starts now. Good Friday morning. Welcome to Tech Check. I'm Deirdre Boza with Carl Quintanilla and John Ford. Today, Lyft craters weak guidance, tanking that stock more than 30% after earnings. Expedia shares also lower after its own miss on revenue. The CEO joins us exclusively this hour. And later, the CEO of DraftKings, live from Phoenix, the head of the Super Bowl, with a 30-second ad spot going for $7 million this year, Carl.
D, we're going to start with the move lower in stocks for the week. The NASDAQ up 12% for the year, but on pace to break a 5-week win streak. That divergence between the performance of the major indices is a big one. The NASDAQ outperforming the Dow by double digits in 23, although I know our CNBC senior markets commentator Mike Santoli has taken issue with some of how that's sliced. Well, it's factual, and I think the main takeaway is that you just turn last year's standings upside down, and that's what you got. So this January into February in particular, you have one of the more pronounced worst to first type dynamics. I think you can pull back a little bit, though, and say 2022 was probably the peak of technology and other mega cap growth being the downside sources of pressure on the market. They had a lot of the work done. Now it's much more differentiation, I think, is happening. For example, you talk about Lyft. Well, Uber's outperforming Lyft. Dell Transports look fine against Lyft. Even Affirm getting taken apart today. Capital One Financial has actually been a good performer over the last 6 months, right? So it's not about, in 2020 and into 21, buy everything that looked like tech. And then last year was sell everything that looked like tech. Yeah, there was the rates pressure and all the rest of it. But all of it to me now is a little more nuanced. And I still continue to see Apple and Microsoft at the top of the NASDAQ with super premium valuations. It's 12% of the S&P 500 or thereabouts, those two stocks. And everything else has kind of had holes punched in it. Now you have Alphabet and Meta trading at a market multiple, and that's after Alphabet getting crunched and Meta coming back from the depths. So it's more of an interesting, I think, less coherent story than just all tech or no tech.
Right. Your other point today has been markets essentially erased the notion of rate cuts for the year. Right. We've added 50 basis points to year-end Fed funds, and yet we're down, I don't know, 1%, as you said.
Yes.
So we've been resilient in the face of getting more real with what the Fed has told us.
Yeah, I think it's because we're talking about smaller increments. We're talking about, nip and tuck type differences between the more hawkish and more dovish scenarios. I'm not sure we've completely eliminated the prospect of a cut late this year, but that's more just like the market's way of just in case risk management. If things break a certain direction, you can't be shocked that you're going to get a cut a few months after the last hike.
Yeah.
But I don't think the stock market story this year is dependent on outright dovishness, but it's got to be the Fed must be mostly.
Well,
down.
how about this then? The notion that maybe we were going to pause in March today. Barclays says 25s through June,
Yes.
right? Which would take you to 5.5. You're getting to where Diamond said you might need to end up.
Exactly. And I think that's the point. I mean, we don't know how the economy is going to respond to that. Is that going to build mortgage rates back up to the highs around 7%? Is that going to cause a stop-start effect in the economy? But right now, January looks really strong. Earnings estimates, earnings revisions are starting to bottom, according to Citi right now.
All right, it's gorgeous outside. Go outside and stick your head in the sun. Okay, so watching the markets, not going anywhere. We're just stuck in the middle of a flat VWAP doji day. Can't imagine there's going to be a lot of buying today, but if it does show up, that'll be a sign. Netflix, 20 points below yesterday's highs. Jeez. Netflix getting creamed 20 points below. Let's see what Netflix looks like here. Netflix. All right, so it doesn't look so bad on the daily, right? Yesterday's high, 374, is trading 353 right now, headed to the 21-day. Higher highs, higher lows. Looking for the bounce at the 21-day. Don't be afraid of the pullbacks. Pullbacks are what we look for to get the best entry in bullish trends, 921 50-day or above the 200-day. Note the 200-day is turning up. That's what we're looking for on most indices. We're looking for the 200-day to turn up. We're looking for all the indices to do the same. We're looking for most stocks to do that. That'll tell us that trends will most likely continue. That's what I'm looking for. I'm looking for more of this 200-day turning up. All of 2022, the 200-day was dropping. Price was below. And most stocks, now they're turning and moving the opposite direction. AbbVie. Above the 200-day. 200-day is flat, but upward sloping. Lately, it's been downward sloping a little bit. But XLV, all right, watching SPY. Let me keep an eye on SPY right now. SPY is bouncing. Boeing, watch Boeing bouncing at VWAP. Boeing bouncing at VWAP. Apple holding up very well. Looks like it wants to bounce. Higher low on Apple is what we're looking for. SPY. NTR. Oh, that looks good. Specialty chemicals. Thank you, John. NTR looking for a higher low. We're getting it. A move above the 200-day. I'd be looking for 100 in the short term. Venmo, that's it. Okay, thank you, Joel. Venmo. I was in the main chat room, sorry. Venmo is PayPal's Cash App application. PayPal, looking for PayPal to break above these levels. PayPal deflating pretty quickly there. No follow through on PayPal. SPY on the move. Boeing starting to lift. Merck turning, Merck a B pivot, looking for a ABCD pattern. You got it on Merck right here. Merck, SPY, looks like it's going to follow through. I mean, I'm looking at all the stocks that are turning higher. Here's A, B, looking for a C and D on Merck. Merck. Merck, you got A, B, looking for C and D now. All right, so here's A, here's B, looking for C and D. All right, Apple turning the corner. Apple's turning. Apple's starting to turn. Cigna, looking for high of the day. Thank you, Michael. Cigna, looking for a follow through. Pretty chart, Cigna, pretty. Okay, nice bounce at the 200-day Cigna. You could stand to wait a little while on this one, unless it starts to just take off to the upside. Look at the volume the last 3 days, Michael. This looks good. 3 days of above average volume. Merck's still going here. Merck's above the 21-day. It's above the last 2 days where we found found sellers. All right, so we're looking for Merck to follow through. Merck's near the highs of the session. Highs of the day for 108.25. 108.25. We're at 108 right now. 25 cents off the high. Merck. Okay, let's go take a look. Okay, a little bit of selling. So it looks like we're going to stay in this range right now, right? Looks like we'll stay in this range. Merck. Merck, you can see the oscillators in the bottom left. About to trigger a follow through. About to trigger a buy signal if we can get above 108, 108.10. SPY, excuse me, Merck. 108.10 would give us a buy signal. Stochastics turning. We're still in a range this morning. Looking for B and C pivots. SPY, still chopping around SPY. Flat VWAP on SPY. VWAP being tested again. VWAP being tested. Okay, SPY looking forward to push off of VWAP. All right, so looking for SPY to get above these this 408 level. Excuse me. All right, Merck, no follow through yet. All right, let's see. Merck.
That's a great point. And to your larger point, I mean, we don't just watch the game, the ads during the game. It's a week-long focus of attention, to be sure. Julia, thanks.
And you don't just get the game, you get a Rihanna concert as well. Just saying. We also mentioned it, the CEO of DraftKings coming up in just a bit. A record amount of money expected to be bet on this year's Super Bowl. And then we will also sit down with the CEOs of Expedia and Doximity on the heels of their results. Expedia blaming the bad weather for a big EPS miss. Tech Check is just getting started.
All right, so Merck. What time is it? 11:17. Okay. 11:17. All right, so here's Merck. This is what I'm thinking on Merck. Looking at the TTM histogram in the bottom panel. Okay, the last time this turned sharply, and then the TTM histogram turned from red to yellow and followed with cyan colored bars. Merck continued higher for what, 6 weeks, 8 weeks? That was a nice run in Merck. That's what it's looking like right now. So Merck could follow through. Watching Merck for a continuation on this buy signal that started this morning at the open. Right at the open. All right, looking for Merck to continue. Looking for SPY to get its butt on the move here. Get its butt in gear. So far, not unusual for a Friday to go sideways. Not much momentum. Let's see if they have any strength to push this above 408. 408 keeps contributing to resistance. 408. AbbVie going for the high of the day here. AbbVie. All right, AbbVie looks even better. I showed you Merck just now. Let me show you AbbVie. This looks really good. AbbVie looks really good. Mm. Okay, let me show you AbbVie. AbbVie looking good. Okay, let me just change this AbbVie.
Shares of Expedia down almost 8% after some rough results. EPS missing by a wide margin.
Okay, so AbbVie breaks out here. The 152.50 calls are very active. Look at the histogram bar on the bottom panel. Look at AbbVie's histogram. This potentially could lead to a big move.
Let's start with that increase in marketing spend. I think there's some questions there. That includes TV ads and YouTube in total up about 20% compared to 2019 levels. Right around the time you became CEO of Expedia, when you pledged to make the company more efficient. So how do you justify this increase in budget and the expected payoff?
Yeah, so there's a few things going on there, Seema, that we talked about yesterday. One is that our B2B business, as we've discussed, is growing very quickly, and the commissions from our B2B business flow through our marketing line. So you're seeing the actual.
All right, looking for AbbVie. The 152.50 calls, 152.50 calls, very active.
Beginning and the end of the quarter. And when those cancels come through, we bought business that doesn't actually happen, and our marketing seems inflated relative to what comes through the results. But had those cancellations not happened, obviously those marketing dollars would have been efficiently spent. And then overall, we are spending more for long-term customer value. So you've seen us increase our investment.
152.50s are growing in popularity.
Performance marketing we used to spend most of our money on. So the seasonal trends are slightly different. So you're seeing a little bit of that in the seasonally lower Q4. So that's really what's going on.
All right. So then what do the trends look like here in 2023? You mentioned the rebound in bookings in January. Any data you can point to that shows us the incremental demand you're seeing there?
Yeah, the trends have been really strong since January. We said in our call that we're seeing over 20% lodging demand, which is considerably higher than where we were in the fourth quarter, even ex the weather. And so there's just been a ton of demand. APAC is starting to come back quite strongly. That's helping in our B2B and our B2C business. Still a small part of our business relatively, but that's been quite strong. And generally, the market's been very robust across the board in the Western world and Asia and LATAM.
Okay, looking for a follow through. SPY, can we follow through? Looking for AbbVie to continue as well. Flat VWAP for now at the highs of the day. We're at the just below the highs of the day, 152. Look for a pop. I just posted on StockTwits.
Gratefully. And what we're seeing is, home rentals have gone way up. We've talked about it for the last couple of years. Vrbo's been very strong for us. So that's been a great business. But hotels have been making up ground, and I think we're getting to a much more normalized level. So in Omicron, everybody was keenly focused on going away, but going somewhere safe. Now people are going back to resorts, back to anywhere, back to big cities. So you're seeing some normalization there, but Vrbo is still much stronger than it was, 2019, much stronger.
Looking at your customer base, Peter, your fastest growing cohort right now is in the United States. How do you play a bigger role in this international rebound we're anticipated to see in 2023 with the China reopening?
Yeah, so there's a few things we discussed, which is, first of all, we've been focusing on the U.S. because that's where we've been making the most technological moves forward, most marketing changes, and playing out our strategy of really playing for long-term customer value. And that's really been working in our Expedia brand in the U.S. And now that we've proven it, we're going to start bringing it to our other brands as they move on to the same tech stacks like Hotels.com
Okay,
and to other
let's light this puppy up. Let's light this fire.
capabilities as we roll out our technological improvements. So that's the biggest part of it. But in addition to that, our B2B business plays a big role in our geography play in terms of places we are not as strong, and that is like a big part of Asia and China, for example, where we don't really participate.
Frano, such pretty colors.
We send travelers in, so there's a lot of opportunities to China through our B2B business.
Yeah, clearly, that seems to be the big story. There's a lot of talk around AI and ChatGPT, especially on this show. I'm curious how you're factoring that into your discussion around how it influences travel and the experience.
All right, let's get this. Let's light this puppy and get this thing going here.
Years on improving the shopping experience, improving the search experience, improving the service experience.
All right, Abby, looking for us to launch above 152 in the right panel. That's the 30-minute. Let's look at the 15-minute chart. Okay, on a buy signal this morning, looking for these oscillators to give us more potential upside. 15-minute backing off the 80 level. 30-minute has plenty of room if it can turn higher. 60-minute chart also turning up. That's good for momentum, not overbought. 4-hour trending higher. And the daily also turned up. All right, so the daily, we're about to go on a buy signal. Abby's about to go on a buy signal on the daily. SPY still can't get above this level. Those Abby calls are up 100%. All right, SPY no follow through yet. SPY no follow through yet. All right. Walls are moving lower. Okay. SPY pulling back to VWAP, still a flat VWAP today. Just watching AbbVie here.
SEC Chairman Gary Gensler appearing on Squawk Box this morning, doubling down on the agency's efforts to regulate crypto. Kate already has that for us in some comments made by the CEO of Coinbase. Kate, I was listening to that interview. I feel like the takeaway for our audience, something's yielding 20%. It might just be too good to be true. That was going to be huge amount. That was one of his points. They didn't disclose that. And geez, so the SEC yesterday finding Coinbase's rival exchange tracking $30 million for not registering one of their crypto products. It was a way to earn yields, like you said, D. Plus 1%. As Gary Gensler put it this morning on Squawk Box, he said this should put everyone on notice. This type of offering, known as staking, is something.
Okay, Apple, no follow through.
Coinbase CEO Brian Armstrong tweeting
Netflix at the low of the day, no follow through. Keep in mind that the call wall shifted lower from 420 to 410, 415 to 410, whatever it was. It can always shift back up, but for now, just be cautious. It's Friday. Okay, we're about to trigger a daily buy signal on AbbVie if this does reverse. Let's see, the 4 hours probably already on a buy signal. Yes, 4 hours already on a buy signal. I'm watching this oscillator, however.
Up next, we are joined by the CEO of DraftKings ahead of the Super Bowl, and then during February, we're celebrating Black Heritage through the stories of our own CNBC teammates, contributors, and leaders in business. Here is New Street Advisor, CEO, and CNBC contributor Delana Safaro.
So I realized like the people I looked up to when it came to the folks in my career path were one for sure my dad. He's a lawyer. He's someone that always drove that, worked hard, and was passionate.
Still in a flat VWAP on SPY. SPY is still a flat VWAP. Okay, flat VWAP, the dark blue line here, still flat. All right, so it's potential to trade above it, potential to trade below it, and still be a doji on the daily, spinning top. All right, we're going to come down and test this 405 area again, looks like. 405.50, 405. We had 404.50 pre-market. I believe it was 404. Let's see. Let me just zoom out here a little bit. Pre-market, we hit 404. Looks like 404.10. 404.15. 404.15 was the pre-market low. At 8 a.m. AbbVie is brewing. AbbVie is brewing. Watch AbbVie here. Okay, looking for this to lift off. AbbVie. Here's the high of the morning over here. Yesterday's high over here. Today's high about to be taken out right now. AbbVie is about to go. Okay, let's go over to stock charts for a sec. Actually, you know what? I probably already have a chart here.
Couple hours into the trading day, let's get you caught up on the markets. We're off the lows of the session, but struggling to hold on to gains at the moment on the S&P, right around 40.75. Obviously, a lot of the weakness is here in tech. Some of your movers today, Spotify adding to its yearly gains as ValueAct now takes a stake in the company.
Okay, Merck above that cloud right there. Merck above that cloud. AbbVie above its cloud as well. Turn in the corner. Looking for AbbVie to continue to press higher. AbbVie. SPY still sitting here. Okay, AbbVie. I'm checking the squeeze. Let's see the 2 minute, the 5 minute. All right, nice looking 5 minute chart. Look at the squeeze on AbbVie. Nice squeeze. That reflects what we're seeing on histogram. TTM histogram is turning really very fast on the daily. Momentum telling me to stick with it. Stick with AbbVie. All right, so today's calls probably roll them out if we pop. All right, SPY still hanging in there.
Gaming Association, a record 50 million Americans plan to bet on this year's Super Bowl, wagering a total of $16 billion. One of the big beneficiaries of the record spending is expected to be DraftKings, whose stock has already rallied more than 45% this year. Contessa Brewer live in Phoenix, Arizona with the DraftKings CEO, Jason Robbins. Contessa, over to you. Hi, Deirdre. Thank you for that. And Jason, we're here on a very breezy Phoenix morning. Dust flying in the air, but there's so much excitement here for
AbbVie.
fans are coming in. How big an opportunity is the game for you to win new customers?
This is the biggest, sporting event of the year, and not surprisingly, it's going to be DraftKings' biggest customer acquisition event of the year. This one should be the biggest ever for us. Every year seems to be growing, and at some point that'll end, but we're on a nice growth trajectory now for the industry. Big numbers in the Super Bowl, and really going to be a great day to get new people to try it out. A lot of people have friends that they'll be in Super Bowl parties with, things like that, that'll show them how to do it. So it's a great time for people who are interested but haven't yet tried betting to check it out.
2 years ago, there was a snafu, so to speak, on Super Bowl for not just you guys, but across sports books. Has the technology significantly changed since then?
Well, the big difference is we were not on our own tech platform then. We were still on our old partner, our third-party partner. We switched over, and this will be our second Super Bowl now on our own tech platform. And I'm happy to say last year was totally smooth. We had just migrated, so definitely, nervous people around the office, but everything was smooth. And I think a lot of what, a lot of the industry is dealing with.
Order flow is starting to look a little bit more bullish on the futures. I'm looking at Bookmap.
On Super Bowl Sunday, because now the game will be played for the first time in a state where sports betting is legal. But at the game, the people can be on their phones wagering. Are you confident that Verizon has put enough broadband into this that the tech will work perfectly for those who are in-state betting?
I can't speak for Verizon, but I, definitely think it's really a cool. What you just mentioned is so cool. This is the first time that people will actually be able to get out of the game, be placing bets, live bets. I think it's going to be such a unique experience for fans that they've never done. Nobody's ever done before.
Okay, the AbbVie calls, the offer is up 100%, 10 cents to 20 cents. These are today's options. 18,500 of them have traded today. 18,500 of the options have traded today. at the 152.50 strike, AbbVie.
No, I think this was just something that we felt was the right choice for us as the company's been very focused on efficiency over the last year. Not surprising, a lot of tech companies, a lot of companies in general have been very focused on efficiency. And we just took a look at
Looking for those Bollinger Bands to open up outside the gray area of the Keltner channel. If it does, that'll trigger a TTM on this time frame. Okay, a little bit more selling SPY. Really need to get a breakout before SPY decides to head south. If it does, AbbVie starting to push. SPY could go down and test 404.15. That was the pre-market low. Don't see it yet, but it's possible. Amerisource Bergen continues to break out. Amerisource Bergen, ABC. Amerisource Bergen and the Medical Supplies Group. Look at the VWAP. If you're a new member, you always want to be seeing VWAP, the dotted purple line, rising up and to the right. And you want relative volume to be pretty high. It's about the same as it was yesterday, but we're pulling away from VWAP. That tells you the stock is in play. RSI giving you muscle. Looks like a bicep in profile. Continuation there looks good. ABC. SPY, no follow through. SPY, no follow through. Okay, 1,000 just hit the 1,000 contracts just hit the AbbVie. 1,000 contracts just traded. We're up from 10 cents to 25 cents now. Looking for a breakout in AbbVie. For TTM to take off to the upside. Looking for a VWAP to tilt up and to the right. Here's AbbVie. 152.04 was the high this morning. 152 and change. 153 was the high yesterday.
Absolutely, Contessa. We've been talking about it for so long, but it's really starting to get traction now. That's our Contessa Brewer. By the way, DraftKings was once a CNBC Disruptor 50 company, and we're now accepting nominations for the 11th annual list of innovators. If you're a private venture-backed company, scan the QR code on your screen, or you can go to cnbc.com/disruptors to learn more. John? Yeah, that's the break. Despite massive layoffs in tech, health is still wanted. We're going to take a look at the state of the job market outside Silicon Valley. Plus, check out shares of Micron, Western Digital, and Seagate, all upgraded to buy this morning at Mizuho. That's pretty significant rallies to start the year. That check is back.
Micron, Seagate, and Western Digital all upgraded to buy. I didn't catch who was talking about it. Western Digital. Okay, that's at the 200-day. Seagate, STX, that looks good. And Micron, was it? Micron? Okay, Micron, holding. Those were all upgrades today. Seagate, Western Digital, and Micron. Okay, 19,375 of these contracts on AbbVie for today, 152.50s, have been trading from 10 cents. They're up to a high, hit a 25-cent offer there, and we're at 23 cents offer now. AbbVie, just waiting for the breakout if it does go. AbbVie. Okay, AbbVie. Grinding higher, AbbVie. Bollinger Bands opening up, top and bottom, 15-minute chart. Okay. Daily. 5-minute. 5-minute looks like it wants to go here. 5-minute looks like it wants to go on AbbVie. That lower band's about to trigger outside of the Keltner band. They're moving away from each other. Whenever the Bollinger Bands move away from each other after being contracted or narrow, that's telling you look for a fast move. If this does get going, we could see a pop through 152.50. That's where those calls. A lot of activity at the 152.50 strike on AbbVie. Offer 125. Offer is 25 cents now, and we're starting to see a move to the upside. RSI is rising. Okay, looks good. Looks good as a trade so far. AbbVie.
Welcome back. More details on tech layoffs. Yahoo plans to cut 20% staff by year's end.
Okay, AbbVie's on the move here. Let's see if they tick it up to 30 cents or so.
Surface and Xbox division. And then Micron earlier this year.
AbbVie looking good.
Employees. Executive salary is also coming down as much as 20%. Meanwhile, the economy is still adding jobs at quite a pace. So where are the tech workers impacted by recent layoffs fighting new employment? Our Christina Parks-Nevelis has some details. Christina.
Well, you just mentioned all these companies, and there's almost 100,000 tech layoffs, and we're only in February, so it does sound dire. But tech employees are actually still in very high demand. So according to Indeed, almost half of the top 25 are tech jobs, with data and cloud engineers actually the most sought after. The difference this time around in this labor force is that the job wanted signs aren't coming from.
All right, there goes AbbVie starting to move now. On the move.
Well, I mean, they're not coming from big tech firms. That's because there's so many layoffs. But instead, more than half of those job postings are coming from fields like consulting, finance, and defense. The aerospace and defense industry making up the majority of Indeed's top 20 companies hiring tech workers right now. Take, for example, defense giant Northrop Grumman.
We continue to grow, and we're forecasting growth. We see the same. We have thousands of open jobs. We are looking at Silicon Valley. We are looking at Amazon. We are hiring entry level. We are hiring vets. We are hiring experienced.
So companies are, that's just one example, are so desperately looking for employees. We saw that already with the 500,000 jobs added in January alone, which means the current tech job cuts are not necessarily indicative, John, of the labor market.
Christina, I think there's often this sort of fallacy that people get into. Just because a tech company is cutting jobs doesn't mean that they're cutting tech jobs, right? A lot of times it's recruiters, it's sales and marketing people who are most affected, not the engineers. But I guess the point is that a lot of non-tech companies are still hiring tech workers. One of the questions I would have is, are they hiring the sales and marketing people? I'm guessing some of those, but it's different, right? If you're talking about just demand for workers who are hiring.
Yeah, it is different. However, I looked at specifically even the semiconductor space, and it was a lot of high-level PhDs that were let go, as well as managers. So maybe managers, that's an easily transferable skill. But the interesting thing, too, is that they're not being laid off for very long, actually a short period. I spoke to ZipRecruiter's economist just about that, and this is what she had to say.
All right, SPY is going to probably impart a bearish bias on everything. All right, Apple's turning over here. Apple turning over. No follow through on Apple. As the markets pull back a little bit more.
they're getting hired. Some of them have severance and they may in their previous job.
All right. Thank you.
A little profit taking in AbbVie. Little profit taking. SPY. Just sitting here. SPY. At VWAP, you can see Bollinger Bands are tightening up, telling you to look for consolidation. Merck just consolidating here. Merck. AbbVie. These healthcare stocks looking pretty good. Merck came back to one standard deviation plus one standard deviation over the last few weeks. Bounced to start this week. Got back above the 21-day. TTM histogram is turned red to yellow, indicating that we could see potentially some follow through on Merck. All right, so we're looking for that follow through. Higher lows this week, higher lows, higher highs. Merck looking for a test of the 50-day. Needs to get back above the 50-day so that can turn back up instead of flattening. Right now, the 21-day, the 50-day are thought to be resistance. RSI is rising up through 50, so that's good. We could see a follow through there. Boeing, higher highs, higher lows. Boeing looking for a follow through. Okay, SPY looking for a bounce. SPY.
PayPal shares jumping nearly 4%, but come down a little bit now, only up about 1% after the company reported an earnings beat and upbeat guidance. But perhaps more importantly, PayPal CEO Jeff Schulman is set to retire in December, ending his 9-year tenure at the helm. He is expected to keep his board seat and will be, quote, flexible with his departure and maintain the payment giant's upward momentum to ensure a smooth transition. The search is now on, guys, for his next in line. You gotta wonder, there's been activists in this name, Elliott, how much they had to do.
Okay. Merck, AbbVie. Looking good. AbbVie looking for a pop. Volume about a third of what it was yesterday. AbbVie.
I think there's lots of questions about the fintech space as you get the banks, traditional banks getting more sophisticated about technology. Some of the upstart firms.
All right, consolidating again.
Having to change
AbbVie.
their tune on customer acquisition.
See if we can pop above that upper band. Okay, so if you're new to Bollinger Bands, when they're moving apart, look for a fast move. If the bottom band starts to parallel the upper band and the middle of the Bollinger Bands, it's telling you to look for a grind higher. If the upper band starts to turn in along with the lower band, that's telling you look for consolidation. So right now, we're on the fence. Looking for a grind higher would help if the indices could make up their mind. We're just chopping around here. SPY chopping around. And a flat doji. So that's impacting a lot of stocks. Flat Doji on the daily. So nobody's winning right now. Doji 404.68 was one standard deviation. Bollinger Bands, the lower band of the lower bound for the week. 420 was the upper band for the week. One standard deviation from Friday's close. So right now we're testing. We're just really just chopping around inside of this doji. Doji. Flat VWAP, not going anywhere. My sense is that we'll probably just do this for the rest of the day into 2 o'clock. If we see some buyers after 2 o'clock, that would indicate institutions. Or if we see sellers, to be clear, I'll probably put my hedge back on in SPXU. All right, markets are just sitting here watching AbbVie. AbbVie is grinding higher. All right, we're back to 30 cents offer on those 152.50 calls. There's almost 20,000 contracts have traded now. All right, here goes AbbVie. AbbVie's starting to move. AbbVie is starting to move. All right, let's go back to Trading View. See what buy signals we have. AbbVie, it's top of the bands right now. Okay. Still on a buy signal since this morning. EZ in the trading room. Hat tip to EZ. Shout out to EZ, letting us know AbbVie was on trading a lot of contracts. That was still at like 8 cents at the time. A couple of minutes later, it was at bid at 10 cents, and now the bid's at 21 cents. Offer 27. Every so often, you get 30 cents offer. AbbVie, let me just check ATR on AbbVie. It's up pretty big today. Back in yesterday's wick, we had a big wick up to 153.70, and they sold it the rest of the day. It's got a $3 ATR, and it's up $3.30. So I'm not expecting a huge move. It looks like it's trying to consolidate right now. AbbVie consolidating right below 152. Okay, SPY. SPY is going to probably bore the hell out of you today. SPY most likely bores the hell out of you. Unless this loses the 21 day and starts to head towards 400, which would be our target if it does. I would put hedges on, buy some puts on bounces, perhaps. If you want to hedge ahead of time, obviously, puts right here, just out of the money, probably not a bad idea for Monday. Just as a precautionary measure, if the markets take off to the upside, you can always take those off. But Bollinger Bands are tight on SPY right here. So it's going to go one way or another. Flat VWAP, tight bands. Somebody's going to win this stalemate. Maybe not. I know it's got Doji, so Doji says nobody's winning.
Disney was able to get Nelson Peltz out pretty quick, but there are a lot of investors with a lot of ideas these days about what companies should do. What are Spotify's options here?
Well, it seems like it really all comes
comes down to cost cutting. That was a big piece of what Nelson Peltz was pushing for at Disney. If you look at the fact that he was really advocating for a focus on profitability in that streaming division, which had been spending so much. And I think it's a similar story at Spotify. Spotify has talked a lot, not just about the job cuts, but wanting to become a platform. And as we know, it's a lot more cost efficient to be a platform business where other people are creating the content than when you are solely more focused on creating that content yourself. So I think this is a similar focus here on cost efficiencies and this idea that there's been so much growth over the past couple of years in the wake of the pandemic, and particularly when it comes to Spotify, perhaps concerns about maybe there was a pull forward as more people found their music subscription services essential when they were spending time at home. That I think there's this question now of, you've done the layoffs, what do we have to do to cut costs and make sure we're focused on that profitability rather than focusing more so on growth?
Is Spotify also one of these names? We were talking about Lyft earlier, where at the time of the IPO, at the time of peak hype around streaming, the idea was, oh, this is gonna beat the world. It's gonna be huge. Blah blah blah. At this point, it's pinned between Apple and Google and other names when it comes to music streaming. A podcast business that has done okay, but doesn't look like it's going to have rocket ship growth. Do they have to think more about profitability and the model than they do about the spending to grow?
Well, look, I would say that the music industry, when it comes to streaming, has an advantage over the content business, because people will listen to the content streaming business, the likes of Netflix and Disney, because people will listen to the same songs over and over and over. It is the soundtrack to their lives. They bring it with them in the car. And there's this sense that you're not going to drop a music service if you're really hooked into it. Whereas you might sign up for a streaming service, watch, and then drop it after your favorite show ends. So I think that the whole tech industry has been focused on growth at any cost. And now the whole industry, including the media industry, is retrenching and thinking more about profitability, and the volatility of the stocks in the past 12 months certainly speaks to that.
It's been so fascinating to watch activism as a whole. Last year was a record in terms of shareholder activism, 900 campaigns, according to one agency. And, they've spent years, Carl and Julie and John, going after smaller firms, but now you're seeing big tech get targeted, perhaps Meta showing how much room there is for some of these cuts, Carl, and more efficiency.
It's been pretty interesting. Bernstein did a chart of all of the estimate revisions to 2024 adjusted EBITDA. Spotify's at the top of the list, and in a good way. So it's going to be interesting to see what kind of argument ValueAct has on the cost side. What a week, guys. And of course, next week we got some earnings and CPI to look forward to on Tuesday. Have a good one. Let's get to the judge of the half.
All right, Carl, thank you very much. And welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the growth trade rollover. And whether that early year rally is now on its last legs. We debate that with the investment committee. Joining me for the hour today, Jason Snipe, Brenda Vingello, Bryn Talkington, and Steve Weiss. Let's check the markets here. I'll take you to the wall, show you what we're doing. It's another down day for the NASDAQ. It's been down 4 or 5, and as you can see, is lower again by more than 1%. It's growth's worst week since late December. Brenda, I go to you first. You're out in Silicon Valley, right? Is that how it feels? Is this the rollover? Is it just beginning here as we see this early year trade suddenly look a little bit in trouble?
Well, I can say the sentiment here in Silicon Valley feels nothing like what the stock market looks like within tech. It still seems incredibly vibrant. But I do think when we think about, can this trade continue, we have to really look at what's happening right now with multiples. We've had a really nice move in the market so far this year. It feels really nice after last year. But I think we're going to be limited in terms of the multiple that people are willing to pay in this environment where interest rates are still rising. So we've had such a strong jobs number recently that I think the Fed is going to continue raising rates. And so I think that's going to continue to put a lid on valuation multiples. So it's just hard to argue for a lot more expansion from here. But it certainly has been nice to see, somewhat of a recovery here in stock prices, and many tech names, not the big, large cap tech names, but many have been down 70% or more. And so I think some of that was just overdone. So nice to see a little bit of a correction here, but it's just really hard to make a case for ongoing improvement from here in terms of stock prices.
Weiss, I got the 10-year at 372. Long duration assets, so-called long duration assets have been hit as rates have gone up. Did we put a cap on that trade that had, gotten off to a great start this year? Because I'll give you some numbers of stocks.
Watch Ab be here.
After you answer that question.
Yeah, so I'm still short. I'm still long TBF, which is short the longer end of the curve because I think rates still do go up. Look, this has been driven 100%, 1,000% by multiple expansion. And as I said before, that in a rising rate environment where the brunt of the Fed activity, the Fed tightening, has yet to be felt at all, really, it's a bad time to do it because you're not at trough earnings yet. That I don't mind multiple expansion. So, look, do I think it still has some more legs? Yeah, I think this is a good reset.
Tech, specifically on this growth trade, you think it has more legs?
Not right now, but I think it'll come back to it because there's an insatiable appetite to buy. I don't think it's the right move, frankly. I think you still want to be mostly in cash at this point because the second half is going to be miserable when you see the impact. But there'll be opportunities. I mean, you take a look at where Microsoft is, and that's come down from the highs. And take a look at some of the others.
Well, I'm going to
take a look at the semis, which have been, incredible to run there, and they shouldn't have been. So you've had this money come in, you've had the post-tax selling season buying, you've had this euphoria about the beginning of the year, and then you had the FOMO, of which plead guilty to the end of it. But yeah, I think that the risk is to the downside.
I mean, in 5.5 weeks, Bryn, I'm just going to give you an idea of names that have run a lot. Meta's up 48%. In 5 weeks. Coinbase is up 64%. Shopify up 39%. Teladoc up 39%. ARK up 27%. So I give you year to date, but then I also tell you what we've done this week because it maybe tells the story that we ask at the top of the show of whether the trade is rolling over. Okay. This week, Coinbase down 22%. Shopify's down 9%. Teladoc's down 6%. ARK's down 7.5%. What do you think about that? Broader question of whether this euphoria that was all around this early tech trade is about to end.
So investors need to understand that on any day, 80 to 90% of the volume can be algorithmic trading or CTAs. And we had a massive, massive short covering at the beginning of the year, which put so much energy onto those exact names you just mentioned. So some of those names maybe got overdone, like a Facebook saying we're going to cut spending. Maybe it deserves to be up, I don't know, about 30% in one day or 25%. But here's what you need to understand. Stocks tell us what they think about the economy. And stocks are pricing in no recession, soft landing. Bonds, though, drive stocks. And within the bond market, the 2-year is what you need to focus on. And so you can put this rally in high beta tech, overlay it with the 2-year, which has gone from November for about almost 470 down to the third week of January, almost 4%, maybe 405. And then where are we today? 450. Because guess who follows the Fed? Fed fund follows the 2-year. Fed funds follow the 2-year. So I still think that although the Fed has come out and said they're data dependent, which is a plus because they're not so behind inflation, we are still, I think, at the mercy of the market saying, well, maybe Powell has more rates, and the cuts that were in the market earlier this year are now off the table. That's what's driving what's going on in tech and high beta tech.
I mean, the poster stock of all of this is Tesla, isn't it? Which you own. I mean, it was at $100, right? And it's at 200. Okay. So in a few weeks, it went from 100 to 200, and today it's down 5.5%. So was that too far? Too much too soon? As Adam Jonas of Morgan Stanley is wondering today?
I think 100 was too low. I think it was too much too fast. Maybe he tweeted he was going to buy Twitter, and then he actually had to buy it.
All right, Spy just chopping around here. Abby looks like it wants to go here. Abby looks like it wants to go.
He did the price cuts in China, which is incredibly smart. Because as much as we talk about EV sales in the U.S., globally EV sales in the U.S. is 9%. Europe is 24%. China is like 50 to 60%. And so he is really gaining traction in China. And so I think that is what people are seeing, is that was really smart to cut those prices. And so, yeah, it went from 100 to 200. It should have never been at 100. But maybe this is now the new price for it. It needs to digest itself. As you know, I bought it at 120, but I sold calls at 150. So I'm capped out at 160 because I got $10 because I thought it's going to take time. That's what the market
But
did.
see, I always find it interesting, though. It's like, okay, well, it never deserved to go down to 120, but sure, it deserves to be back at 200 because it never should have gone down to 100 in the first place. I mean, he says, this is Adam Jonas, of course, at Morgan Stanley. We believe the window of opportunity on valuation has closed. Further upside from here will require a more substantial narrative change following their investor day on March 1st.
I think that if you have the market, you have tech under pressure, I would find it very, very obscure and strange if Tesla bucks against that trend and goes higher. So I think that 200 to 190, 200 is a good price right now. And then ultimately now you've got to have fundamentals follow that move, and you need to have the nonsense go away. That's distracting, him, which he runs 3 companies. He needs to be focused on Tesla.
It's a lot more than that, but yeah.
Right, but the ones we know about, those 3 companies. So
I'm sorry. What I don't understand of Tesla is why nobody looks at the China risk. Look what happened to every company doing business in Russia. Now, that's a real risk. So to me, that's somewhat of a negative. That's what you're betting on at this point.
So Jason Snipe, this broader question that we use maybe Tesla in part as a proxy on this early year trade. How do you assess it from here?
Yeah, so, I think about last year, all the tax selling and sentiment.
All right. All right. Excuse me. So watching AbbVie, just having a conversation with the daughter while waiting on the markets here. AbbVie looks, the pressure keeps building, but we need to see the pop. We need to see the pop squeezing even tighter now, squeezing even tighter. AbbVie. I like that the 60-minute oscillator is turning up.
But I'm really looking at going forward. We have a Fed that's still very much engaged in policy. And there's been a lot of talk about disinflation and dovish commentary. I didn't really see that. I saw a Fed that's been steadfast on their approach and what they need to do going forward. There is a data dependency here. There's a lag effect on what they
Boyle on the move.
400 basis points in a year. I mean, there's
Boyle popping here.
From a policy perspective, and I think we will see the impact of that this year, and we'll likely see it towards the end of the year. So for me, high beta names are not the winners going forward. I think you have to turn to value and some more.
All right, let's look at Boyle.
Names, and I think that can still perform. I mean, I feel like
It's pretty warm. A warm winter. Very warm winter. Natural gas. Been hearing a lot of conversation about natural gas is better than using petroleum, by climate activists and everything. At $6, that's amazing that we got down to $6 from where it came from.
So if you go through the cycle of the markets, it's amazing. The different data points that have driven the market substantially one way or the other. So it used to be the jobs.
Weekly range, Boyle coming down from, geez, look where it came from.
And in this cycle, it's clearly inflation. And to me, that's the most.
That's crazy.
It's a binary event. So, right, binary for this particular trade that we're talking about. I get you make that argument.
Depending upon,
if it's hot, rates go up more. You think the Nasdaq's going to go up?
There are degrees of it. The answer is there are degrees of it. So you could possibly see China reopening, although it's a little early. You could see feed through from the jobs number, even though I think they'll be revised dramatically. I mean, if it reverses the dialogue that, hey, inflation's plateaued and it's declining meaningfully, then you'll see a major sell from the market. You see 1,000 down points on the Dow. On the other side, the market, going back to my other dialogue, market just wants to be optimistic. Take single data points in a sea of red to buy the market.
I mean, it has been the absolute reverse of that for a good long time to this point, hasn't it? Right? Everybody was so negative. Sentiment was negative. Returns were negative. At some point, it's going to be reasonable to not be as negative. You're going to have to make what I think is so interesting, and Brent and I were talking about this too. You're going to have to make this call sooner than you see it, because the market's going to have moved before it actually comes to fruition fully.
Yep.
Right?
Yep. And it's evolving, as I said, it's going to evolve into the second half. You can get crushed in the second half if you're long stocks, maybe not crushed, it could be sell off, depending on where it comes from. But here's what I tell you: if there's just a little bit in that CPI report, it shows a little bit of inflation moderating somewhat, then it's off to the races again.
But you've already said that you think we actually have more room to run. And Michael Hartnett over at Bank of America, Brent, as we talk about,
On a trading basis, not on an extended.
I hear you. He's talking about that sort of basis as well. He says, very tempting to see February 3rd blockbuster payroll as peak no landing, peak Goldilocks. The moment financial conditions flip from easing to tightening, we stick with fade S&P 4,200 to 4,300. So yeah, okay, you can get a little bit more, but your luck's going to run out at some point. So, don't be naive to where this can go.
I think that the S&P is still so dominated by tech. So I still think you have about 30% if you put Amazon and Meta back into the tech sector. And so because of that, I think that tech will still remain under pressure. Therefore, the technicals of the S&P have faded at 4,200. Just makes sense. But I think tech is still going to be under pressure, and that's the wild card. You can't have 30%, well, you can, but 30% of an index under pressure and have the whole index go higher. And that's why the equal weight S&P has been doing so much better. One point, though, also that people are focused on CPI is yesterday, if you look at the Atlanta Fed wage tracker, year-over-year wage growth came in at over 6%. So that averaged over the last 20 years about 3.5%. So although the CPI and owner equivalent rents probably are coming down, and that's a big chunk of CPI, I don't know if CPI actually comes in hot, but that wage growth is really important. And Powell said, I think that the missing workers is more structural. And so that's where that plays into that narrative. Inflation is going to stay stickier for longer. And so therefore,
Boyle. All right, AbbVie coming back in a little bit. AbbVie coming back in. Boyle pushing higher. On the left is the 5-minute. On the right is the weekly. Now we've come a long way from $140 back in the thick of the Ukraine conflict starting. 15-minute Boyle. 30-minute.
So it had lagged, and it lagged for good reasons. The reason I sold it is that the Microsoft announcement or the reveal was a game changer. Now they'll roll it out in phases, but when you're talking about Google that's got 97% share of search, 97% share of the advertising market, you don't have to move the needle a lot on Microsoft to really just make it a more competitive pricing environment. So of course Google's got their own, they've been talking about it longer than Microsoft. That changed dynamics.
Microsoft off quite a bit over the last few days. Microsoft. Apple pulled back. SPY pulled back.
It's a money-losing trade for sure, but it just changes the dynamics completely. Competitive dynamics in their most important market.
So Jason, what do you think about that? You own Alphabet as well. Was it that much of a game changer that it's literally time to assess your holding?
Listen, I think that trade is a little bit overdone. I mean, obviously, Google has really struggled over the last week and a half.
What trade is that?
And search, obviously, is really
what's that?
Google pulling back.
Down? Okay.
Yeah, the downside. You got it. Yeah. So for me, I think it's a little bit overdone. I mean, search is obviously Google's war chest, and they'll figure this out. I mean, the AI move, I mean, I get it, but I think it is slightly overdone. They're doing some other things just in terms of efficiency and cost containment, processes that they're looking to implement going forward. But obviously, the narrative is this AI story, and I think they'll figure it out. They're a very innovative company, and I think it's slightly overdone here.
But can I ask you this, Jason? So the cost is going to go up quite a bit, right? As they look to have these capabilities in. So on one side, the efficiencies you're getting from laying people off and getting
Microsoft's getting a lot more appetizing right here near that 260 level. Google also at the 50-day. Is that an area where we'll start to see some buyers, or will they show up at 85? That would be a triple bottom down there at 83 to 85.
Today versus a week ago when it was oversold, I see dramatic changes. So based on that, frankly, I'd rather own Microsoft, than Google. How do you respond to that?
And looks, Absolutely. And Weiss, listen, I totally get that. I mean, I own them. The reason I say it's overdone, I mean, Google, I mean, they have controlled this space for so long. This is a win. Absolutely. I think they win the first set of the match. But I think going forward, there will be opportunities here. And I think there'll likely be a little bit more pullback in Google. But I just think as an innovative company that they are, cost containment structure going forward,
Abby.
I think there will be a chance to get back in this. And
All right, so what is SPY doing? SPY's just chopping around in a doji. Flat VWAP overhead, so we could move right back up to 408 and still be in this doji pattern. To be clear, if we close down here at the lows, I'll put that hedge back on. I'll put the hedge back on SPXU and UVIX. Maybe I'll buy some calls with Yoda. The defensive sectors have been beat up over the last few weeks, 6 weeks or so. Looking for those to bounce. Healthcare, consumer staples, utilities. Of those three, XLB, XLP, consumer staples looks the best. XLP, Papa. XLP looks the best. As far as price action, XLU continues to drift lower. What's Merck doing? Merck looking very strong here. Merck. Okay, I might add to Merck at some point.
Yes. So I've talked about Viper Energy quite a few times, which is actually a mineral rights company.
If Google catches a bid here at the 50 day, I'll probably buy some shares.
Diamondback, but I felt that this pullback in energy as a whole was overdone. I know that hedge funds have been reducing that energy exposure, which has put pressure on the downside. But I like this story on a secular growth basis. Diamondback continues to make good strategic acquisitions. They've got capital discipline. They want to have 75% of their free cash flow distributed to shareholders via the dividend base, their stock buybacks, and then their variable dividend. And so I just think this was a good entry point. I bought it around 139. I think that today you saw Russia.
All right, if Google catches a bid here, I'm probably going to buy some shares. I'll watch it for a few minutes, but if Google catches a bid here at the 50 day, I'll probably re-enter. All right, SPY's starting to bounce a little bit more. Watching Google. All right, what's AbbVie doing? I'll keep an eye on AbbVie. Okay, AbbVie looks like it's going to break out. AbbVie looks like it wants to break out. AbbVie. AbbVie looking for the follow through. Next week's 155s are a 26 delta. Next week's 150, 250s are a 48 delta. That's better. 150, 250. Next week looks good. All right, need to break out here. AbbVie. Our market's kind of slow. Slow. Apple turning at the lows here. Apple. Yesterday's closing level lows. Apple's bouncing. Stochastic RSI turning. That might lend to a follow through. All right, so just to reiterate, if for some reason the indices can't manage a follow through off of these lows, I'll probably put that hedge on SPXU on near market on close. That's purely for a hedge. UVIX calls are a potential trade as well. Let's look at VIX. Let's look at VIX. Okay. On the right is VIX hourly. VIX on the week. Weekly VIX. We're in the lower part of the range. Certainly could see a move back to the top of the range, but right now looks like SPY's catching a bid. SPY's catching a bid off the low. Watch Abby's trying to do something here. Abby is trying to go. Abby, watch it. Trying to do something here.
I like Walmart better. I think that I still believe we're late stage economic cycle. I think that I would prefer Walmart. Walmart even said last quarter that they're getting higher end shoppers, which are the target shoppers, coming to Walmart. And also, as I think about a hedge fund doing a pairs trade, I feel like if the economy weakens, people would go long Walmart.
I would too. I think Brent is absolutely correct there.
Walmart here if I had to buy one of the two.
Okay. Weiss, we have some business.
All right, so yeah, remember back in 2007, back in 2007, 2008, when the markets rolled over and dropped 55%, Walmart gained. Walmart gained 52%. Okay, there's the peak over there on the left. In Walmart, the S&P 500 peaked on the same day, October 9th, 2007. Initially, we dropped about 10% on Walmart, about $3, and then it went on to make 52% while the markets fell 55%. Okay, so here's that S&P 500, 2007, 2009. We rolled over, dropped 57.8%. Sorry, 57.8% from the October 9th high. We rolled over. At the same time, we had Walmart gain 52% over the following year. So keep an eye on Walmart. If for some reason the markets went to hell in a handbasket, I'd be looking at Walmart at some point. It's just been in a range right now. So I'd like to see Walmart above the 50. Note the 50 is rolled over on Walmart. Target making higher highs, higher lows. All right, TJ Maxx holding up fairly well. All right, so I really don't see anything worth chasing after today. A few things are moving higher, like Merck. Merck is higher, 1.39%. Merck looks really good, actually, as far as a swing trade from earlier in the week. Prism noted it on Monday, Tuesday, I believe. Monday, Tuesday.
where was that going to be? I thought I'd have to own it for the next 6 months, to get there. So I was able to own it for a few weeks, and then I'll refresh because it's a trading market.
Okay. Thank you for that. You guys may have noticed, let's show Tesla shares as well, because they've taken a little bit of a leg lower here. Our Phil LeBeau is joining us now with what's going on, and there seems to be some reporting around the Biden administration that's hitting this stock, Phil.
Yeah. Yeah, and it's the question of what's going to happen.
All right, so Biden's saying something about
networks and the standards that are going to be released by the Biden administration. There's some reporting that those standards will be released next week, and that as part of this, these new standards, there will be a requirement that Tesla open up its supercharger network. Just to bring everybody up to date on the supercharger network, you can charge Teslas there. You can't charge other EVs there. Now you can charge Teslas at non-supercharger network sites along with other EVs.
oh, so the government tells Tesla that it has to open up its charging stations for other cars. That's pretty funny. I think the government's getting a little bit too over controlling over the last quarter century. Just getting a little crazy.
I'm not sure if that's enough to warrant the stock being down 6% today, but keep in mind, it was up, I think, 8 days in a row. This is the first down day in the last 8 days, and it's had a heck of a run over the last.
All right, I'm looking. Yeah, Tesla. I'm looking for a pivot to re-enter on Tesla. I'd buy some shares. Let's see what happens at 180. There's no hurry. This is currently in a process of consolidating gains. It looks like Tesla.
You're going to have to open up the supercharger network, but as we mentioned earlier, Elon Musk has said in the past he plans to do that.
Your point that the stock was already down, and we highlighted it, shortly off the top of our show today.
Okay, you got your first dark blue bar on Tesla. That's telling you, confirming what you already know, that we got near the 200-day, starting to consolidate.
Right. And obviously, they see with the writing on the wall. Federal funding is one aspect of this. If you are a Tesla investor, by the way, does it matter to you that the supercharger network is opened up? Well, for Tesla users, they probably will not be happy that now there will be other vehicles taking up some of these stalls. And I have heard from friends who have Teslas that they're not always crazy that some of the supercharger networks they go to, they're already busy, depending on how many people are there charging up their vehicles. And now you have the potential to have even more vehicles in there. But this is one of those things that I think everybody realized.
AbbVie still looking for a breakout.
Whether it's going to happen in the next year, 2 years, whenever.
All right, Tesla. Okay, let's take a look at Tesla with a open mind. All right, look at that volume. You think these people, these investors, these portfolio managers that bought Tesla over the last 3 weeks, that volume, you think they're gonna just start selling like crazy, or are they gonna buy, or are they gonna sell calls? What are they gonna do? 382 would be 170. That's right around the area between 180 and 170 that I'd be interested in it.
Hi, Tickler plus 800.
All right, big pop here on SPY. SPY, big pop here back above VWAP. With AbbVie's breaking out. AbbVie breaking out.
You cannot have this company drag along all these other big companies that go look at ChargePoint, which is a publicly traded stock. It takes 24 hours to get a full charge because they're slow. And so they should get the benefit of building that out. They should not be penalized.
I agree. If they weren't giving them money, fine. The government should not go in and say, and I believe the Biden administration is socialist, but in this, if they're giving them money and they're taking the money, then they have a right to put conditions on the money.
But then the other
Tesla's free to say
companies
no.
get a pass. So the other companies
They're not getting a pass.
they are getting a pass because they're not having to build out their own network.
They all
they
are
aren't.
building out their own network. Volkswagen is a mass network.
Hummer
GM
has
has said
one.
they're building out.
Hummer has the only EV charger I've ever seen is on the Hummer commercial. Never seen it ever anywhere.
Bottom line is you're not as concerned as you are, you know, politically, philosophically. You're not from a stock standpoint.
No, I think to Phil's right. Investors don't care. Tesla drivers for sure care. And I think that Tesla cares about customer satisfaction. And therein lies the problem, is the customers that the product are buying would be very upset with that.
Let me ask you this: what if Tesla takes the money and says, "Okay, I don't know what the regs are going to say," and say, "Okay, not Tesla owners, you know, normal pricing. Non-Tesla owners, you know, we're going to charge you 3 times," and makes it a revenue source increasing the leverage from what the government funding is.
That doesn't make any sense, because if you go to an EV station, there's like 12 EVs. I don't care as a Tesla driver if you charge them $1,000. I just want to get in and out because it already takes too long to charge anyway.
All right, we'll make that the last word. Good debate. We're counting down.
All good points. Tesla.
Obviously, for sports gambling, which stocks could
236, 382, 382 between here, 170 and 180. 190 is probably 236. Tesla. I'd like to see, got to see a base first. 198, we broke above that level. We'll see if a base forms. Tesla will be interested in shortly. There goes AbbVie breaking out. AbbVie breaking out, looking good. Look at the stochastic RSI that's telling you that the trade is on. Look at the 60-minute over here, the weekly on the right over here. AbbVie, look at that weekly chart. That looks good. What about the daily? Let's see the daily. All right, so rising. All right, the 4-hour, embedded, and the hourly chart. Cool. Those are all supportive of higher. 60 minutes on a buy, on a gap up this morning. There goes AbbVie. All right, AbbVie. Looking good, AbbVie. Okay, those calls are now almost 50. They're being offered at 50 cents. All right. That's a good trade. That's a good trade on AbbVie. All right, I rolled some of those AbbVie. I rolled some of those out to next week, 155s. That was a trade that comes to you from EZ in the trading room. EZ in the trading room. Thank you so much for that trade. I'm sure people in the trading room appreciate it. It's 52 now and going. All right, so 52 and going.
CNBC News update. The U.S. is pushing for more safe passages for UN humanitarian aid across the Turkish border into northwestern Syria. The roads along the only United Nations authorized border crossing were badly damaged in the immediate aftermath of Monday's quake, and the first UN aid convoy did not reach Syria until Thursday afternoon. The FBI is expected to search former Vice President Mike Pence's Indiana home for classified documents in just a matter of days. The FBI's expected search comes after a small number of classified documents were found at Pence's Indiana residence last month, according to Pence's lawyer. And Cowboys quarterback Dak Prescott was named the 2022 Walter Payton NFL Man of the Year. The award was established back in 1970. It recognizes an NFL player for his excellence off of the field. Prescott was awarded for his charity foundation work centered on cancer research in honor of his mother and suicide prevention in honor of his brother's memory. That's the very latest. Scott, back over to you.
Appreciate that, Frank Holland. Now, speaking of the Super Bowl, let's go live to Phoenix. That's where our Contessa Brewer is ahead of Sunday's big game with a look at what else sports betting, and there's going to be a lot of that. Contessa.
There sure is, Scott. Super Bowl's a massive opportunity, too, to win new customers. FanDuel CEO Amy Howe told me this morning it's the best chance of the year, and really it's her lead to lose here. FanDuel has nationally 42% market share for the 12 months ending in November, according to Eilers and Krejcik. DraftKings comes in at 24% market share. BetMGM in third place with 14%, though it is number one in iGaming. And Caesars comes in fourth. But some 60 other companies split 11% of the market share. And for some, the costs of doing business are just simply too great. The return on the investment too little or too slow to realize. And we're already starting to see them folding. Maxim Bet has closed. Fubo TV is getting out of the sports betting business. Churchill Downs is bailing on sports betting, though it is still trying to find a way in through horse racing. And meanwhile, potentially formidable competitors are launching this year. Fanatics CEO Michael Rubin says Bet Fanatics will be live in every state where it's legal except New York by the start of football season this fall. His more experienced competitors, though, are...
All right, AbbVie's still going. Nice job on AbbVie.
Told me just yesterday, if you're not at the starting gate, you're not in the race. Meaning if you're not
All right, SPY, no follow through. It hit VWAP and stopped.
here on the horse race. A survey by National Research Group Sports indicates almost half of bettors use multiple online sports books. This is not a loyal group. Promotions, wallet, ease of use definitely matter. And Scott, I just got numbers in from New York alone. You want to know how big sports betting is? Gross gaming revenue is up year over year by 5%. But listen to this, handle. How much was bet? $1.8 billion in 1 month in one state.
I'm not surprised, I suppose. Contessa, thank you. That's Contessa Brewer joining us from out Phoenix today ahead of the Super Bowl. Up next in our chart of the day, it's a mystery stock pulling back this week after a strong start to the year. Bryn owns it, so we're going to see if she's sticking with it. We're back after this.
Yeah, taking profits, that makes sense to me. Okay, AbbVie looks good. Tesla, watching Tesla.
All right, we're going to get to our chart of the day now. There it is. It's Roblox. It's down 9.5% this week. It's down more than 4% today. Bryn, you own it. Worst week since mid-December, right? Gaming, serious question. Across the board, really. Post-pandemic, no?
No, I think that this is part of the, as I was talking about earlier, this high beta tech trade. There's a lot of short position in Roblox that got covered. If I look at the other high beta names, they're down equivalent. I think ARK's down about 8% this week. I own it. I like this. Their earnings are coming out soon. They were not going to come out and say, hey, we've got free cash flow yield of 8%. We have great earnings. What people want to know is, what is their daily active users? So they put out monthly metrics. And so it's not really a surprise because those monthly metrics. But what's incredible is that in December, they had 65 million daily active users, up 18%. But bottom line, its average booking per daily average users is around $7. Street wants to see you're bringing in new users and making more money off of them. Of course. What I do is it's been trading between 30 and 40 for around a year. And so when the stock gets close to 40, I sell 50 out of the money calls. And then as it trickles back down to like 32, 33, I close it out. And so instead of just sitting in the stock, being negative on it, I'm using that position to sell calls and earn some return that way.
I don't even know what the forward PE on this thing is.
It's I mean, there's not an E. There's not an E, right? So it's like, this is a company that definitely has cash flow and generates revenues, but it's in the growth stage. And I do think that Roblox as a platform continues to remain very, very sticky. I mean, once again, having 4.7 billion hours in 1 month. That was 21% year over year. This is not like a Snapchat. This is a very sticky platform.
All right, Spy, no follow through yet. All right, Tesla, just sitting there watching Tesla. AbbVie. All right, consolidating AbbVie.
Right? Because let's remind our viewers too, you sold completely out of ARK the end of last year, right? Yeah. So that was sort of a I've had it moment, right? But you still are selective enough that you like some of these?
I do. I don't think you can generalize everything. Like, for example, I think the FANG trade, FANG, is in those four names aren't going to move together. I think that trade's kind of dead. I like Microsoft. I don't own Amazon. I don't own Google for sure. And so I think that you need to be selective. I do like the Roblox platform, and I think Dave Baszucki has done a wonderful job, just like continuing to gain traction. So yes, I am willing to hold this because I think ultimately they will make money. They maybe get taken out at some point. I just think that all of my friends and all of the kids that are on this stay on this for hours and hours and hours. They will monetize this and be earnings positive at some point.
Okay. Weiss, quickly, because Deere is next week as well, which you own, and so is Devon. Yep. Right?
So Devin,
in terms of earnings.
Yeah. So let's talk Deere first. So I bought a small position in Deere. I like their technology, which is actually, excellent for farmers because it decreases their need for fertilizer and other supplies because it's much more targeted and other technology they work on, including autonomous tractors. I don't know what the quarter holds for them. But when I took a look at Cat and other, say, marquee names, even if they miss, they come down slightly, and that's it. And then they move higher. So that's why I was comfortable buying Deere in front of the earnings. In terms of Devon, look, I mean, it's a quality company, high quality company. I actually added a little bit of Chevron on this flush. But nat gas is so low right now, so sustainably. So
Spy, looking for a follow through. Watching AbbVie. AbbVie's perking up again. AbbVie looks like it's going to go.
And of course, we're going to grade your trades. Email us, askhalftime@cnbc.com. Tweet us, use the hashtag GradeMyTrade. We're right back.
All right, looks good. AbbVie looks good. Nice job. All right, Spy going. Looking for AbbVie to continue. All right, nice trades all around. I see Lee Star telling me he's looking for a diamond pattern, either a potential break higher or a break lower, whatever the direction is. Right now we can't seem to get through VWAP. 406.50 is a big area. Mikey's been posting levels all morning. So if you're not watching Mikey, or Mikey is Heart Pumper, by the way, Mikey, and I mean, several people in the trading room, Lee Star, Rick, Brother Bill, Prism, Money Magic. A special thanks to Money Magic as well, posting a lot of good charts in the Money Magic channel. Very helpful, especially if you're trading options. Just don't go at it blindly. Know what your levels are.
Is this growth trade in trouble? Is this the early part of the rollover?
If I didn't mention your name, we know who you are. So
Growth as a category, mega cap growth within it, speculative growth as another subset. They're kind of guilty until proven innocent, just given what's happened. You know, the whole trajectory from that
Dexcom buyout, good.
peak of the market, and then you know they obviously had a lot of payback, but usually that's not what takes you higher from here. Splintering of growth is probably between winners and losers is probably what we're up to here. I've heard some talk about that already. I can still see Apple and Microsoft conspicuously with these massive premium valuations, people thinking they're somehow havens, and a lot of fracturing elsewhere, whether it's Alphabet or Meta, kind of had its pain and now it's coming back from it. So I don't know that that's the place to look for the fate of this market. I'm much more concerned about, do the consumer cyclicals hold up? And can we have the messages coming from this market that suggest that good news is still good news? Because I think we're at risk of the economy looking too strong for comfort as we get into the CPI and then, of course, the next Fed meeting.
Merck doing well. Very nice day on Merck. Looking for a follow through, Merck. All right, good trades to get today, folks. Even on a down day, you can find, as Kramer would say, what's the saying he uses? There's always a bull market somewhere. I think that's what he says. I hope I didn't freak you out by using his name, but all right, Merck. Yeah, looks like a nice follow through, Merck. AbbVie, a little profit taking up there. Can't seem to get through this kitchen door. As a kid, before woke, when we were kids, used to have this saying, fatty, 2x4, can't fit through the kitchen door. I don't know who came up with that one. Probably somebody with no feelings for other people that get hurt. Anyway, it was always a interesting comment as a kid. Can't get through the kitchen door. That always sticks in my head when I'm looking for a pop or a push higher in something. A squeeze and it doesn't move. Yes. Exactly, Frano. Yes. Dexcom, DXCM, buyout candidate being mentioned by Frank, Dr. par excellence. All right, so all right, Dexcom, DXCM. Let me just take a look at the daily chart. DXCM. Nice big back to 125s, doable it looks like. Look at the volume in here. Okay, that looks good. Everything looks good on Dexcom. Yeah, I wouldn't buy it at the high of the day, but it does look good for a follow through. All right, AbbVie, pressure to the upside. I would use the 5-minute and the 15-minute for signals. The 5-minute just to watch what traders are doing, watch the volume. But the 15-minute for a follow through signal, we want to watch the two of them. Watch the stochastic RSI on the bottom. AbbVie, watch the stochastic RSI down here. Okay, supportive or not supportive of a breakout. If this is up and above 80, generally I would look for a better entry if it pulls back first, like it did this morning. Following through on the 60-minute. 5-minute looks like it's going to keep going. Here's the 15-minute now. You can see the 15-minute a little bit embedded, but strength, you can see stochastic RSI turning up again. 5-minute over here is flagging out like price. Okay, so I'm looking for an edge here. Looking for an edge. Let's see what the 30-minute looks like. 30 minutes still has some momentum. So that might carry over to the 60-minute. You see what I'm looking at here? Stochastic RSI. As we're pushing higher, I wouldn't be buying AbbVie at the high of the day, but it does look good. AbbVie. Okay, VWAP, pressure. You know, most people are thinking bearish after a week of downside action. The late to the party bears are going to get scorched, possibly. All right, so just like anything else, if you're just now getting bearish, maybe not the best idea. You probably want to wait a little bit. Just my 2 cents, but let me just go take a look at the S&P equal weight index, which is probably telling us growth and value. Growth is still looking good versus value, even though they're down today. Okay, all right, SPY's on the move now.
High took alert plus 800.
Okay, it looks to me, it looks good for, let's see. Let me just look at advanced decline percent. All right, that's starting to hook upward. All right, this is good. This is good for a follow through. If we can finally get back above 408, I'm sure Mikey's posting charts. I would think that 408, 407 is probably a significant area too of option volume. 0-day exacerbating moves. Advanced decline percent. All right, so if this does start to hook up, that'd be setting up for next week. We got a weekly OPEX today. We got monthly next week, and we got CPI. So here's my thinking for next week. All right, so take it with a grain of salt. CPI could be a big deal. All right, so Bloomberg is already saying it's going to be up 0.5%. Last time it was up 0.1%, something like that. It was either up or down 0.1%. Anyway, there goes AbbVie. AbbVie breaking out while I'm yapping away here. There goes AbbVie again. All right, this looks really, really good. AbbVie chugging along. All right, let's see what those calls look like now. Easy. Great job on those. The 152.50s for today that were, I think you probably got in at what, 8 cents? They're now 70 cents. Shizzle. Can you think, can we get to $1? That'd be awesome. $1 on those calls would be awesome. 70 cents now. Awesome. There goes SPY. AbbVie continuation.
High took alert plus 800.
All right, great job, folks. Great job. Nice follow through. B. Thanks. All right, so very nice on AbbVie. SPY, looking for a follow through. Did these guys stop talking? What happened here? All right, I got to log into Mirror Trade. All right. Gonna need to put the air conditioner on. It's getting hot. It's pretty funny. What's the temperature outside? Temp here in Myrtle Beach is, drum roll, 70 degrees.
Sales growth in its Gucci and Kylie Jenner brands. But we also saw some unevenness in staples, where both Tyson and Unilever saw sales fall. Newell Brands beat but issued ugly guidance for the quarter and the year, and Kellogg and Pepsi were still bright spots thanks to growth in snacks. So what exactly is the state of the American consumer, aside from snacking, and how should you be positioned right now? Let's ask Joanne Feeney, partner and portfolio manager at Advisors Capital Management. As I mentioned, Dom is with me as well. Joanne, I'll start with you, and why do you see ongoing resilience here?
Well, good afternoon, both Kelly and Don. Good to see you guys again. The consumer situation is a confusing one. On the one hand, we're still seeing pretty good resilience at the low end of the consumer retail market, whether that's a TJ Maxx or a Target. The Target had some inventory problems they're working through, but ultimately, consumers that need to save money, those sort of in the middle of the income distribution, are shifting down, shopping at Marshalls and TJ Maxx, etc. And folks at the very high end, which really aren't seeing a lot of a budget problem from the higher inflation, are still continuing to spend. Overall, I think the big aggregate number that investors need to be aware of is that disposable income, adjusted for inflation, so real disposable income, has actually been rising for the last several months. And that's not because real wages are rising, not because wages on average are keeping ahead of inflation, but rather because more people are employed. And so when you have this aggregate increase in folks employed, they're getting paid, their real disposable income is actually up. And I think that lies behind some of the consumer resilience we're seeing out there.
Dom, just curious what you would add following all these earnings reports that we're getting.
What's interesting is you laid it out perfectly because it is such a mixed bag of commentary. But what it comes down to is that jobs market. And the reason why they're so hyper-focused on the labor component of inflation, of the economy, and everything else. If you take a look at the way things are shaping up right now, we're seeing inflationary pressures ease in certain key parts of the core CPI elsewhere in the marketplace. If that does...
Thanks. Thanks for all the nice posts in the room. Brian, Prism, Frano, lots of good stuff.
And so if in the DNA of Americans is to spend, we are a consumer spending economy. More than 2/3 of our GDP is. So if that is the case, those consumer names could be ones that, if they are beaten up enough, become some of those relative bargains that people are looking for.
And Joanne, just to get specific here, Ulta Beauty, TJ Maxx, parent company, Casey's General, all three of those stocks, by the way, are up over the past year. Target's down 20%. Do you think that should qualify as well?
Yeah, Target had a big inventory problem. The pattern of consumer spending really did shift, and Target was not set up for it. They had too many discretionary goods in their stores. They need to shift that over. And so they took a big hit. And at this point, investors are saying, well, prove to us that you've solved this problem. So I think that, the stock has languished in the wake of that. But I do think that they're going to see pretty resilient spending, and so that makes that a good opportunity. And plus, they have a pretty decent dividend, well above average. So
Yeah, Crush, I agree with you 100%.
Infrastructure is a good place. Defense is a good place to be at this point.
Yeah, a lot of support for names like Lockheed, L3Harris, Raytheon. All those qualify. Also, you're looking a little bit in tech, and just do tell, because to Dom's point about
Okay, AbbVie still making higher highs, higher lows. SPY trying to break out and move higher. All right, so that looks good. Like to see Apple. Apple's on a buy signal. Apple on a buy.
to other parts of the market now.
Yeah, it's a really challenging time for the tech or growth investor.
Apple's on a buy signal. Watching that for a reversal.
Clearly coming down. Growth is decelerating, right? You look at those numbers, you can kind of explain the decline of the stock prices over the last year. And I think there's still a lot of uncertainty. That's an area of the economy that is facing contraction in some places, notably PCs and smartphones.
Dexcom still going.
Cloud is still in demand, still growing, but it's growing more slowly. So I think investors looking for tech opportunities really have to be long-term focused. We continue to like Microsoft. We like Amazon. We like Google. We're a little bit nervous about some of the regulatory issues. We're a little bit nervous about some of the search competition now emerging from chatbots. But ultimately, they still own the search market, and we think that they will be able to use the chatbots as well as we're seeing, for example, Microsoft start to jump into that.
Sure.
So you have to have a long-term focus in tech at this point.
The economic focus is going to be big, right? The macroeconomic story, because what you've seen is a lot of companies and their CEOs start to manage expectations lower. They have during the entire earnings season. They could be doing so for the coming weeks and months. If that lower bar is able to be cleared, there might be a case to be made if the terminal rate for the Fed funds is coming up in, say, the next 2 to 5 months, right? That there's a catalyst, there's a call to action for investors to get back in. That's not to say it's going to happen, but a lot of folks are hyper-focused on whether or not there is that bat signal that goes up. And they're trying to figure out if it is the Fed and interest rates, or whether or not it's any kind of commentary that comes out that's even incrementally higher than what the lower expectations are.
Exactly. Looking through Harker now, sort of saying labor market issues might be separate. We don't have to keep fighting that battle per se, but bad signal is the image I like for now. Guys, thank you. Joanne Feeney and our own Dom, too. We appreciate it. Let's turn our attention now to Lyft and what exactly happened with that disastrous report last night. The shares are now down 36%, on pace for their worst day on record after giving extremely weak guidance for this quarter. And it was just after Uber posted its strongest quarter in year ever. Both stocks were up about 45% to start the year, but after today's move, Lyft is now negative year to date and 80% off its highs. Deirdre Bosa is here now with more on what went wrong, and are they just losing share, Deirdre?
That's pretty much it. It's not really what happened this past quarter, which was decent in terms of expectations. It's where Lyft is going, and the street has decided it's not really going anywhere. I mean, you talked about Uber's quarter. It set the bar high, and Lyft during the earnings call kept talking about competition. They wouldn't actually say the word market share, but they're being beat here. And that's what's really hitting the stock. It was that profitability that investors are now looking for. They're searching for. Lyft was actually there to first to get there in terms of an adjusted EBITDA versus Uber a year ago, but now they're giving it up in order to compete with Uber. So I think one analyst called it a debacle for the ages. The earnings call.
Okay, let me turn the air on. This is really hot today.
Today's session, Kelly, this is a company that went public at $24 billion market cap. Is now, what is it, around $5 billion or so. It has been absolutely disastrous. And I think it tells you really that ride sharing may be a winner take most. It used to be that maybe there could be a duopoly, Uber and Lyft, but Uber has just pulled so far ahead this week.
All I keep thinking is, can this be the death of TAM, please? If I hear one more thing about total addressable market, how many times, Deirdre, with Uber and hey guys, total addressable market, look at how many people take taxi, look at the pent-up demand. I mean, it didn't matter at all. It was totally irrelevant. All it did was bid up the market valuation, reward people who were in early, and it's been a disaster as a publicly traded company.
Well, remember also, Kelly, when it was autonomous driving that was going to be the thing that made Uber and Lyft profitable? That didn't shape up. But it's a good point, because now folks are starting to wonder what actually happens with Lyft from here. Could a buyer come in and see some value here? You look at GM, which made an investment years ago. Why wouldn't it just buy the whole thing now? If it's trying to develop its own autonomous vehicle network, would an Uber go in? Probably not. They'd rather just see Lyft flounder where it is. The DoorDash, Tony Xu has said he doesn't really see the synergies between ride sharing and food delivery. So where does that leave Lyft? And I think that's a question that investors will be asking in the weeks and months ahead. Or maybe Lyft can turn it around. I don't know. It's not a lot of buy calls out there anymore among Wall Street. I think there was 8 downgrades this morning.
And real quickly, what is this whole issue with insurance? And I ask not because of the whole did they or didn't they beat on earnings, just more from the point of view of why is their insurance exposure so problematic and so big? What is that telling us?
So Lyft has always had its eye on insurance. This has been a big cost for the company. And when you think about it versus Uber, right, it actually costs more to insure cars that are carrying people versus cars that are carrying food and food delivery. So Lyft talked a lot about this and that it hit that guidance profitability. But I honestly think investors are looking past that, Kelly. The whole story is just market cap as we started
SPY
out.
on a buy signal for the last 8 minutes.
Totally, and demand issues that obviously, no matter whether you're carrying food
I got a ways to go to get up to the highs of the day.
don't have demand, and that's what the market's upset about. Deirdre, thank you so much. We appreciate it. Deirdre Bosa. Coming up,
All right.
we're getting to the bottom of this housing market.
It's a good day.
From renters to buyers to the builders. Where are the best opportunities for investors? That's next. Plus, one VC Titan says there's a mass extinction event coming, and a lot of startups aren't going to make it. He joins us with why this drought will be worse than the financial crisis and what founders can do to fund their companies before it's too late. And as we head to break, here's a look at the markets. The Dow's up 112 points, but the S&P's in the green, in the red by a point, and the Nasdaq is down almost 1% right now. Look at the 10-year yield, 3.72%. The exchange is back after this.
All right, SPY on the move. 5 minute. Let's see what we got here. 15-minute SPY. All right, so above 408, 409 should be good on SPY. Nice reversal back to the top of the range. Same idea as the bottom of the range. The top of the range, very possible with a flat VWAP. All right, SPY on the move here. Nice job. Dexcom still going. Dexcom. All right, looks good. Advanced decline percent, looking for a change in direction here. Are starting to see a hook.
Welcome back to the exchange. We've seen a huge rebound in shares of the home building stocks, up more than 50% since last June, even as mortgage rates have surged. Could it be that this spring selling season won't be as bad as feared? Santander sees a surge in household formations. UBS sees a jump in search activity. Let's get to the bottom of this now with Diana Olick, who's looking at the renter piece of this. Stephen Stanley, chief U.S. economist at Santander U.S. Capital Markets, who has the pulse on buyers, and UBS analyst John Lovallo on the prospects for a further rally in the builders. Diana, let's start with you.
Well, Kelly, as housing overall gets more and more expensive, we're seeing the rise of the millionaire renter. The number of renters with household incomes over $1 million tripled in the 5 years from 2015 to 2020 and continues to rise through now, according to a new report from Rent Cafe, which is an apartment listing service. Now, this includes both single and multifamily rentals. And the number of wealthier Americans, that is, people making over $100,000 a year, jumped 82% in that same period, a total of 2.6 million high-earning renters. Millennials, of course, make up 28% of those renters, with Gen X coming in second at 23%, followed by baby boomers. Gen X are renting.
All right, Apple buy signals continuing to chug along.
Now, the majority of millionaire renters are in management positions, followed by financial services, CEOs and legislators, software developers, and then lawyers and judicial workers. The top cities for millionaire renters are on the coasts and right here in D.C. Of course, San Francisco held the top spot. But cities seeing the biggest growth in wealthy renters, Seattle, Miami, Portland, Oregon, Austin, and Nashville. And of course, this is all positive for higher-end apartments and single-family rental REITs. Kelly?
And I'm sure there are ways for people to play that. Maybe we can talk a little bit about how those stocks have fared and, what that's telling us.
Yeah, absolutely. Look at some of the big REITs like Avalon Bay. They got crushed in the early parts of the pandemic. Then they got better as rents began to rise. There was some trouble. But these are the
All right, folks, I'm going to make something to eat for lunch, probably a sandwich. I'll be back. Give me 5 minutes.
which is doing build for rent communities, and some of those communities are very high end with rents between $4,000 and $5,000 a month, and you're seeing more affluent renters moving into those. So if you look at some of the REITs that have that higher end product, those are the ones that could benefit from all of this.
Very interesting. And it could keep upward pressure on rents, broadly speaking, Diana. I mean, that's the big question from the inflation point of view is, are they peaking or not?
Well, we are seeing rents ease up a little bit, but you are seeing increased demand. Now, the big question is going to be when more supply comes on the market. We're about to see a huge number of apartment rental units come on the market this year, and that could change the rent price dynamic a little bit, but demand just doesn't seem to be
Hi,
falling
Tickler
off just
plus
yet.
800.
Fascinating. Diana, thank you. We appreciate it, Diana Olick. Let's go to Stephen Stanley now, who's looking at household formations and what they're telling us about home buying and maybe renting activity as well, Stephen. I don't know if you want to key off of what Diana just said, but you do see some pent-up demand here.
I do, Kelly. Good to be with you. So, yeah, my thesis is more of a long-term situation, not so much around the cyclical idea, but we saw a massive increase in household formation during the pandemic. People wanted more homes. They wanted, people moving out of urban environments into bigger spaces and whatnot. And it felt like a lot of that was going to reverse. Maybe not all of it, but a lot of it was going to reverse in 2021 and 2022. And we did see that in 2021. But surprisingly enough, the data for 2022 was just released last week, and it showed a significant acceleration in household formation. So I think
Extreme high tickler.
on top of what right now is, of course, a pretty weak cyclical environment for housing, the underlying structural one is still very positive. I think it's still one in which supply is falling short of demand. Builders are going to be, scrambling to catch up, I think, for years.
Do you have any insight, Stephen, on what's going on with all these millionaire renters and kind of the renting versus buying aspect of this and what that would all mean for inflation?
Well, I guess for one thing, obviously it's more expensive at the margin to buy these days because mortgage rates are higher. But I think in general, the way that inflation is measured in the U.S. is keyed much more off the rental market than the ownership market. And so to the extent that there is a skew between those markets one way or the other, it will have an impact on the way that we perceive inflation.
And final word on that, do you think that we're going to get kind of an unpleasant upside surprise here, maybe a head fake?
Extreme high tickler.
I think that is a risk. I think that people have been very optimistic that inflation was going to come down rapidly in 2023. And it feels like to me we've captured a lot of the low-hanging fruit already, and it's going to be much more of a struggle to get inflation from where we are now down all the way to 2%. And a lot of Fed officials have been signaling that. So I think they're kind of braced for that scenario as well.
Yeah, good point. Stephen, thank you for your time today. Stephen Stanley with Santander. And we turn now to John Lovallo for a look at the builders. And John, what a run they've been on. And I don't know how I take Stephen's point about the long run demand for housing and the shortages we face, but could we be at a cyclical peak right now after this rally?
No, we don't think so, Kelly. Thanks for having me. Some pretty encouraging signs that have came out in January. Google home searches for new and existing homes were up 24% month over month. That's sort of an encouraging point that leads us to believe that we're kind of returning to normal seasonality in this home building market. And that really corroborates what the builders have been saying, where January demand has been pretty good, and they're starting to see kind of typical seasonal norms come back. So I think that, the stocks have had a very good run, but this is a cyclical industry, as we know, and they tend to overshoot at the top and they tend to overshoot at the bottom. So we still believe that multiples have a lot of room to blow out.
I guess thinking through, they totally called the turning point. I forget who it was on our show who said if you followed the builder stocks, they kind of peaked and told you that we were going to get this big spike in rates, and now we're seeing the opposite. They were, in other words, falling as kind of a sign that this rate shock was coming, and now they're doing a whole lot better. The multiples are back; they're still low, but if we have an economy that's rolling over, can the housing market still continue to do well and put up good numbers?
We think so. I think, first of all, estimates have been reset appropriately. So I think that expectations are on the investor side in good shape. On top of that, there is just a real undersupply of housing in the U.S. And whether or not rates go up or go down, people need a place to live. And there's and by our estimates, 3 to 4 million units of pent up demand that's still out there, and that has to be released at some point. So could we go through a bit of a slow period? Absolutely, but longer term, the fundamentals look good, and I think the housing stocks are reflecting an environment that is likely to improve.
So you think the group is kind of broadly speaking can continue to do well, and where is that pent up demand coming from? What's driving that?
Yeah, we absolutely think the stocks continue to do well. We still have, call it 20 to 30% upside in most of our price targets. Where the pent-up demand is coming from is pretty broad-based, but I would say that the millennial generation, as most people have heard this talked about before, is a big driver of demand. They've been out of the market for a number of years and just finally starting to come back, whether it's life events, marriage, having children, and so forth, whatever the case may be. They are back and they need a place to live, and they're willing to make things work by moving a little further away from the city, buying a smaller footprint, whatever it takes to make that math pencil.
Finally, what's going on with the hot parts of the market from the past couple of years with the pandemic relocation? They're now the first ones that are seeing declines. So if this was all kind of a work from home restructure trend, cost of living move, you'd think there'd still be continued demand there, but instead they seem to be the hardest hit. Why is that demand drying up? Is it because people literally have to go back to the office now?
I think it's a couple things. I think if you think about Austin, Phoenix, Boise, markets like that where prices have ran so much that there is going to be some natural give back. And I think that this trend of kind of in-migration towards the Sunshine States is still very much intact. I just think that, some of these markets overheated a bit. They're resetting, and I think that you're going to start seeing some improvement there as we go.
All right, better than feared for 2023. That's the call. And so far, again, listings in my town, we're seeing that. We're still seeing sort of a surprising amount of demand, given everything that's going on. John, thanks for your time today. Thanks for joining us.
Thanks, Kelly.
John Lavala with UBS. Coming up, we're counting down to Sunday's big game with a look at the company spending big on ads. If you invested in the big advertisers last year, by the way, you lost quite a bit of money. So which ones are buys this year and which ones should you bail on? Our trader will make her case. As we head to break, the Dow is at session highs up 170 points with Chevron, Walgreens, UNH all leading the way. Salesforce, though, down another 4%. Disney right behind it. The exchange is back after this. Go.com. Welcome back to the exchange. Very different look here on markets today than what we're familiar with for the year, because the Dow is leading the way with a 0.5% gain near session highs, so up 170 points. S&P's up 7, but the Nasdaq is down 0.5%. Big headwind there. Chinese internet stocks like JD.com, but also let's take a look at that 10-year yield, 3.73% here. I mean, this is a pretty pronounced move. We were below 3.5% maybe last week. The fact that we keep drifting higher, there's some global events at play here. There was the strong one-year consumer expectations data in the Fed and the survey this morning, but keep an eye on this. It is certainly a headwind for the NASDAQ today. Let's get to Tyler Matheson now for a CNBC News update. Ty?
Kelly, thank you very much. And here's what's happening at this hour. Texas Attorney General Ken Paxton has agreed to apologize and pay $3.3 million of taxpayer money to 4 former staffers who accused him of corruption. Their whistleblower claims led to an FBI investigation of Paxton. That is ongoing. Paxton continues to deny any wrongdoing, saying the settlement will save money for Texas taxpayers. A lawyer for one of the former staffers says the size of the settlement speaks for itself. Florida's legislature has passed a bill expanding the state's program to fly immigrants to Democratic-led states and cities. It will let Governor DeSantis relocate migrants from any state in the country, not just Florida. And a wildlife alert at a popular Japanese ski area, quiet day on the slopes, interrupted when a wild boar, there it comes, oh my goodness gracious, knocking a snowboarder to the ground and then turning on another snowboarder. I've never seen anything like this. Neither person happily was injured. The ski resort say they've never seen wild boars on the slopes before, but just to be safe, boar warning signs, Kelly, are being put up. This boar must be a skier, not a boarder.
I don't think of them as winter animals. See what you did there. Tyler, I'll see you soon. Thank you so much. Still ahead, after 2 slow years, IPO activity is starting to pick up again. Could we see a resurgence in startup investments as well?
All right, I'm here. I'm just watching the markets, eating lunch.
And during February, we're celebrating Black heritage through the stories of some of our CNBC teammates, contributors, and leaders in business. Here is RBC Capital Managing Director and CNBC contributor, Halima Croft.
I'm most proud to be my father's daughter. My father, Howard Croft, was a civil rights activist. He went down to Mississippi to help register voters. He did that at great personal sacrifice. That he was really sort of a foot soldier in the civil rights movement. He was not well known at the time. And I think about everything I've been able to achieve in my lifetime. It's because of people like my father and all of those civil rights activists. Black History Month is that month where I think back on all of those incredible individuals, both known and unknown, that just sacrificed so much to bring about such profound change in this country.
Welcome back to The Exchange. It's no secret the IPO market has gone silent in the past 2 years, with 2022 being one of the slowest on record. But activity, actually, it's starting to pick up. This week was the busiest for IPOs since October. Not quite the same story in private markets, though. According to Crunchbase, startup investment in the fourth quarter was down 63% year on year. And my next guest says things aren't likely to get better anytime soon, and the startup world should prepare for even a mass extinction event that makes 2008 look quaint. Joining me now is Tom Lavero, general partner at IVP. You guys are supposed to be optimistic, Tom. We can't have bad news coming from your corner of the world, too. Welcome.
Thank you for having me, Kelly.
So I do see a lot of analogies between this period and '08 in the sense that while we were all, being destroyed by the GFC, the iPhone was born, right? And the mobile revolution. And I see this now as, while this business cycle may be on its last gasp, look at what's happening in AI. Just talk a little bit about this dynamic and how it's affecting the startup world right now.
Yeah, it does seem like AI is the next major wave of innovation for the tech world generally. It feels like an iPhone moment for sure. It's one of those few moments in tech where you see this technology and you immediately realize it's going to change the world. And I think the entire world is going to bend in its direction. We're already seeing this within our portfolio of companies.
I wonder, though, I have to imagine that capital writ large has shrunk. So in other words, maybe there's less funding available to go into new startups and, higher rates and all the rest of it. So does that mean, especially with this shiny new toy in town that might be going into AI, what's happening to the rest of the startup and kind of new business and tech world?
Yeah, that's right. Times have changed. I think it's going to be a tough couple of years for startups that are venture backed. That is, if they don't realize the environment has changed and they don't play their cards right. And so it's all about adjusting to the new reality.
And what is that? What does that look like? What would your advice be if I'm a company? And there are a couple right now we're talking about still in the IPO pipeline. What should they do?
Yeah, 3 pieces of advice. 1, realize that the cheap, fast, abundant capital that was actually irrational is gone. It's not coming back, and those valuations you saw in the public markets aren't coming back. 2, reorient from growth at all costs to efficient growth. And 3, do your cash planning now. Don't assume it's going to be easy to raise. Cut burn if you need to. And then if you do those things, I think the good news is the economy is actually on solid footing. And this is one of the best times to grow a startup. And that's why firms like IVP are out there still investing.
Why do you say it's still a good time to be growing as a startup?
When your competition contracts, when they're spending less on marketing, when they're not hiring those top level engineers, that's when you can go on offense and do those things cheaper and easier than it was, say, 2 years ago.
That's a great point. And what do you think? I mean, we're talking a lot about kind of incubating companies, developing and bringing them to market. But what about the rest of the bigger tech landscape? We're seeing a lot of layoffs starting there. How do you think the story is likely to end?
I think it ends the way it always ends in tech, which is short term. There may be a few bumps in the road, but if you look out 5, 10, 15, 20 years, technology is the fastest growing sector in the economy, and it will continue to be. It is the power horse for innovation in our country and across the globe.
And do you think there's going to be potentially acquisitions in the space as the bigger players are eyeing this pipeline as well? I mean, especially for what could be otherwise a pretty quiet year with not a lot of IPOs, not a lot of deal activity. Could we see that from some of these names?
You got it exactly right. Big companies didn't want to acquire startups in the public or private markets because they were trading at irrational multiples, 50, 100 times revenue. But as those valuations and founder expectations are reset to normal levels, like the levels we saw in 2015 and 16, then the public companies can go out to their shareholders and justify these acquisitions because they don't look so expensive anymore.
Yeah, it's reality is setting in, and maybe in the long run, that's a good thing. Tom, it's great to talk with you today. Thanks so much.
Thank you.
Tom Lavero with IVP. Let's stay in the VC space, the startup world. Angel investors are key to a startup success, yet a lot of Black business owners aren't connected to that kind of funding. Sharon Epperson is here now with a look at one nonprofit, Sharon, that is working to change that.
Hi, Kelly. Well, we looked at a program that was developed by the Institute for Entrepreneurial Leadership to find out how and why they're focused on educating and connecting Black investors and startup founders. As a young physician, Dr. Elizabeth Claiborne saw a need for a better way to stop a common condition she saw in the ER.
What this does as a doc is it empowers anyone anywhere to stop nosebleed fast.
She invented this Band-Aid-like device for your nose called NasoClip and launched the business in 2020. Getting funding for her startup has been a challenge. The year George Floyd was murdered in 2020, Black founders got a record 16% of angel investments, up from 0.5% in 2019. But in 2021, that figure fell to just 2%.
Black companies are just not getting the funding. And especially when you look at Black women, that's even less.
Jill Johnson runs a nonprofit that introduces Black entrepreneurs to angel investors, helping them obtain critical funding, connections, and knowledge.
Capital in the United States of America is so plentiful. We have capital chasing some crazy deals, right? It's so plentiful, yet we have certain groups that have been historically excluded from this access, and we need to change that.
To be an angel investor, you must be an accredited investor with an income over $200,000 if single, $300,000 with a spouse, or a net worth over $1 million, excluding your primary residence. These investments are high risk. More than 2/3 of startups never deliver a positive return to investors.
I absolutely do expect an economic return. I believe in these companies.
Angel investor Gina Nesbeth initially put money into NasoClip after hearing Dr. Claiborne's pitch, and later invested more. In the past 2 years, she's invested in several startups.
I believe the companies themselves are going to grow, and I believe they're going to hire people of color. And that's putting capital in the hands of people of color. That, to me, is addressing the racial wealth gap.
Through angel investments, Dr. Claiborne has raised over $1 million for her startup so far and plans to have NasoClip on the market in April. If you're interested in investing in a startup, you can do it on your own as an independent angel or join an angel group. Being part of a group gives investors the opportunity to pool their funds, to share knowledge, and to mitigate risk, Kelly.
It's an independent angel. It sounds like a superhero or something. What happens? We were just speaking about how the landscape is changing. There's less capital available. Is that going to starve these groups in particular of the funds that they might need?
It's been a real struggle for so many groups to get this capital. But what people need to do if they're interested in doing this is to look and see what avenues are available. What angel groups perhaps could they go to learn more? A lot of universities have alumni angel groups. Nonprofits like Eiffel are some that can teach you about it. And then find out if this is going to be right for you. The Angel Capital Association has a number of angel groups and platforms listed on the website. Find out more about them. Go to a couple meetings. See if it makes sense for you.
No, it's a great point. I also look at that product, which seems so clever, and think, well, what happens if a big company sees the idea and copies it and steals it? How do you not only bring something like this to market, but make sure that it's going to be successful in the marketplace? You need resources for that, too.
She didn't start that business till she had the patents. So,
Smart.
Yeah, exactly.
And those little steps can make all the difference in being successful, having the right coaches, the right, people to kind of get you there.
So it creates a network, and that's what they're trying to do with Making Black Angels, to get some advisors who happen to be angel investors as well, who can work with entrepreneurs and helping them not just start their business, but grow it, scale it, and then exit the business, and maybe someone will want to buy it.
Absolutely, when it's appropriate. Sharon, thanks so much for your reporting on this. We appreciate it. It's good to see you again. Sharon Epperson. Still ahead, a firm getting crushed on its wider than expected loss, but it's a different story for this payments name. We'll reveal it and what's driving its gains next. exchange, Dow continues to lead the way today with a 100-point gain, while the S&P is now in negative territory by 2, and the Nasdaq is down almost 1%. As I mentioned, 10-year yield right now is about 3.73%. That's a major headwind. Let's turn to mega cap tech as well, where we're seeing mostly red here. In fact, all across the board, even Alphabet has turned negative. Apple down 0.25%, Microsoft down 2/3, Amazon down 1%. And out of all of these names, Microsoft is the only one that's actually going to end the week in the green. Alphabet is down 10% just since Monday. Of course, we all know what's happened with its rollout of its AI technology this week. Elsewhere, Expedia, among the worst performer in the S&P, among missing estimates on the top and bottom line, with earnings per share coming in 24% below consensus. They're blaming this on cancellations due to severe weather. If so, it'd be a one-off, but the shares are perceived down 8% as reflecting maybe some bigger concerns. Sales and marketing expenses also soared 32%, and revenue was only up 15%. It's even dragging down shares of other booking sites like Airbnb, so it's not really a share story here. TripAdvisor, Booking Holdings all seeing declines of between 3.5% to about 5.5%. Now, Global Payments was the mystery chart we showed you before the break. It's moving higher by about 4% after giving better than expected guidance for 2023. And interestingly enough, the CFO is saying they expect a stable worldwide macroeconomic backdrop through the end of the year. Maybe wishful thinking, but investors don't think so. They like the message here, sending the shares up, as I mentioned, almost 5% today. Coming up, what ad recession? Companies are shelling out record amounts for Super Bowl spots, but should investors shell out for the stocks, the names spending big bucks, and whether they should be in your investing playbook? We'll have that next. Welcome back. Tech and social media companies raising another red flag about ads during their earnings season, but you wouldn't know it from the record price again for Super Bowl commercials. Same story year after year. Julia Borson is here to break down the numbers and the companies spending big money. Who's it this year, Julia? I doubt we're going to be seeing a lot of crypto again.
We're not going to be seeing a lot of crypto, but one thing's for sure, Kelly, based on these prices, very little signs of an ad recession, at least at the Super Bowl. Brands are paying up to a record $7 million for a 30-second spot, up from $6.5 million last year. Even several of the companies that have announced major layoffs, such as Google, Workday, and Warner Brothers, are investing in spots. Some key trends to watch this year: we can expect more beer ads now that Anheuser-Busch no longer has exclusive rights. Molson Coors has partnered with DraftKings to invite fans.
All right, so we'll continue to produce lower highs on SPY, tagging 408 and change. The previous high of the morning.
Some other key trends in this year's Super Bowl ads: celebrity cameos from everyone from Will Ferrell to Serena Williams to John Travolta. And look out for QR codes, which are expected to be in about half of this year's spots to encourage consumers to scan to learn more. Now, one thing you won't see a lot of this year are automakers. Kia is the only automaker confirmed to be in the Super Bowl so far. And yes, Kelly, as you mentioned, no surprise that crypto companies will be absent after a surge in crypto ads last year. For more on the Super Bowl, you can watch an interview I did with the NFL's Brian Rolap on CNBC Tech Check's LinkedIn page.
You should have had a QR code for that, Julia.
I should have. That's right.
We've got one coming to this show. They're going to be everywhere. I don't know if we can invest in that. I'll ask Victoria. Julia, thank you very much. Julia Borston. Which of the big names throwing money into Super Bowl ads this year should investors throw their money behind, and which should they avoid? Because last year was a disaster.
Making a lower high.
Victoria Green. She's CIO.
Headed back towards VWAP. SPY. VWAP is right here at 406.64. Looking for a higher low. That's not materializing yet.
Okay, Meta. This is like, yeah, okay. So let's start. Maybe we should put together an ETF. Right. And then we just trade on as a short of everybody that has Super Bowl ads, right? We'll call it punt or something. All right, let's turn to your first buy here, which is Uber. And after being on pace for its worst day of the year because of Lyft's disastrous results, they did just report a strong quarter. And you like the stock here. Tell us about it. I do. I really think they're going to retest their highs up at 44. They finally broke out of the sideways range they've been in for a couple of months. But it's not just that. They have the scale and the profitability. And you saw the Super Bowl matchup this week in earnings between Uber and Lyft. Uber executed. Lyft did not. People are willing to pay more for their rides. Uber is the more luxury product. They've got 118 million riders now. They're ramping up their different lines of business with Uber Eats. And now they're getting into freight shipping. So I think not only are they expanding globally, they have the riders. Only about 17 people cross-share across the app, so they can continue to grow cross-share revenue, and they're trying to grow ad revenue to $1 billion by 2024. I really like the trajectory of the stock, and I like the momentum a lot, so I'm a buyer of Uber here. All right, let's turn then to Pepsi, a very different kind of name, a frequent Super Bowl advertiser as well. They just posted earnings. They're having their best week since October.
PayPal still climbing
for 16 quarters straight. So you're sticking with this one? Absolutely. They have a history. Their management likes to give conservative guidance. That's why they continually beat expectations. We love their way to execute. First off, who doesn't have chips, Cheetos, Fritos, and Doritos at their Super Bowl party? So obviously Pepsi is a great play here. But not just that. Look at their chart. They have had three months recently where they've had these dips like they've had to start this year. And each time they've stopped at a higher low and they pushed up to a higher high. They're in this uptrend channel. I really like this chart. I really like the stock. They've been very disciplined with their pricing. They're able to pass on a lot of their inflation to consumers, protect their margins, and they have the potential, I think, to push up the 185 and potentially push up higher. So I think you see Pepsi really well positioned, both technically as well as the fundamentals on the stock. Strong earnings, strong management. Yeah. You got to love it when all three of those align. All right, let's turn now to the drinks makers, and you're a buy on one and a bail on the other. Your buy would actually be Budweiser's parent company, AB InBev. 7-day losing streak. A notorious Super Bowl advertiser, but you like something you see with profit margins. What's going on here? Yeah, so they're more of an emerging market stock than people realize. Only about 30% of the revenues comes from the U.S., and so we'll very
much benefit from a weaker dollar, and we think the momentum they have in Latin America can continue to progress. So we look
SPY
beyond
still
the
fading a
US.
bit
So
more.
not only am I hoping for like puppies and Clydesdales in their commercial, but I think that they continue to sell well. They pass on their margin. We've seen this time and time again from these beverage makers of how are they able to pass on prices to consumers. And so far for Budweiser, they protected their margins. They're going to have a lot less FX headwind next year. And we see continued growth not only in Latin America, but potentially also in China. So think of this not as just the U.S. and sitting around drinking an ice cold Budweiser on your back porch. This is also an emerging this chart. They've been stuck over
All right, a lot of bloviating going on here.
I'm betting on them to get a little lift here. I never think of them as an EM play. That's a great point. So then we'll turn. That's your buy, but you would actually bail on Diageo.
All right. Enough of that bloviating. Just yap. Jeez. Okay. Hope everyone's having a good day. We had a nice run up to 408. That gave you an opportunity to sell some in strength. Most stocks are responding in kind, pulling back, consolidating. AbbVie's below its high of the day. Looking for follow through. Merck is doing okay. Merck is continuing higher. Merck is higher. Merck's at the high of the day right now. VIX. Watching the VIX too. I hope everyone's having a good day. That AbbVie trade alone had potential to make your day. Had the potential to make your day. AbbVie earlier. Merck is also continuing higher. Merck. Let's take a look at Merck. Merck is at the high of the day. Still surging here. Merck still going. Looks good on the 15-minute, the 5-minute on the left, 15-minute on the right. And let me just ease on over to the 60-minute time frame, see what that looks like on it. Merck 60-minute following through. This morning I was looking at TTM on Merck. I think this one, I think I have it here actually. Which one of these is Merck? Is that Merck? That's Merck. All right, look at the TTM at the bottom. See how the red is changing to yellows? Let's see what it looks like now. Merck probably looks a lot better. Might even be above the zero line. Not yet getting there though. Getting there. All right, we're about to turn to when we see these yellow histogram bars getting smaller and smaller, heading towards the zero line, and then we start to see the cyan bars show up, the light blue bars show up. Then we're looking for that green signal. So right now, Merck is at the high of the day. If you're scalping it, maybe you want to take some off. Looks like we're going to pull back here on SPY a little bit further. Merck doing well. All right, so when I see that histogram turning like we did with AbbVie, see how sharply this turned? That's telling me AbbVie's momentum most likely will continue over the next few days. Doesn't mean we can't do what we did back over here in August, where we ran up and then we produced some red bars, then some final yellow bars before actually breaking out. We did make higher highs and higher lows through the end of the summer into the fall on AbbVie. Finally hitting that upper VWAP, second standard deviation, before pulling back in December, like the markets did in general. All right, so we got this nice pullback to one standard deviation VWAP. We're back above anchored VWAP that goes back to January 2022. January 2022. I've been using that as an anchor, being we were in a bear market the entire year. As we dropped, I'm using that as my anchor point in any stock that I'm reviewing. Same thing with Merck. This anchor point goes back to January, the green line there. Okay, and this was SPY. SPY looking for it to cool off as these darker bands, histogram bars start to decrease. Let me see what it looks like on SPY right now. SPY. Okay. NYMO is down to minus 47, so we're looking for NYMO to change direction. Okay, Merck at the high of the day, getting rejected. Merck hourly chart. Merck hourly. Still more upside potential. Daily. Okay, looks good. The 50-day is the next target for Merck. 50-day. Merck's 50-day. All right, SPY dropping below VWAP now. Merck's 50-day is up there at 109.29. 109.29 is the 50-day. So Merck currently a little bit less than $1 below that level, the 50-day. Merck looks like it's topping. VWAP still tilted up and to the right. Nice volume. Dexcom having a good day today. Dexcom that is dipping again. Looked like it was going to bounce and make it back up to the highs. Dexcom with good earnings out. Carvana getting slammed. Carvana's down quite a bit. Okay, Carvana. Let's see, CVNA continues lower. All right, back to the 21-day. Making these stair steps higher. Carvana. Not really that interested in this one at the moment. Let RSI and stochastics reset. Maybe we'll have a setup. Volume by price in this area. Maybe some support right around 8.30 to 10. 8.50 to $10. Carvana. All right, AbbVie pulling back a bit now. AbbVie. All right, SPY's below VWAP, looking like this could pull back some more. SPY. All right, Merck, SPY. SPY is below VWAP. It's on a sell signal on the 5-minute on the left. 5 minutes on a sell signal, SPY. Daily's just chopping around. All right, so SPY's still fading though. SPY's fading. All right, so the thought is that we could, if you look at the daily, we're still in a doji over here on the right. Still in a doji. And we just went red on the day a little while ago. Again, after being green on the day. RSI, stochastic RSI is oversold in the bottom panel. Not much to do here. We're chopping around. We moved above, moved below, moved above and below VWAP. Let me look at something real quick. Bank of America yield spread continues to narrow. As it is narrowing, it is bullish for equities. As this is dropping, this line over here on the right, once it displays. Hello, inside there. SPY bouncing. Oh, that's the wrong one. But it is moving lower. Okay, this one here. That was the effective yield. All right, as this line is dropping, that's bullish for equities. If this was rising with the markets pulling back this week, I'd be a lot more concerned. Here is February. Here's March, the reversal in 2020. As this dropped, that was all during that year was bullish into 2022, the peak in 2022. And that started to turn higher in January. You see that right there. January 2022, this started rising pretty rapidly. I told you bond traders were starting to position for a pullback, what turned out to be a bear market all of 2022. Now it's dropping again. That's bullish for equities as long as that continues to move lower. Okay, let's take a look at, can I help you? What do you need? Cat wants attention. Let's see. IBM, by the way, is holding on to that 200-day, looking more bullish. 1, 2, 3, 4. All right. Let's see what the volume looks like on IBM. Trading 135, 135. All right, needs to get above the 21-day IBM. At 136. All right, so IBM looks pretty good. If it wasn't just sitting here in a flat base, I'd be more interested in it. If it was tilting upward like it was in December, see that upward tilting along the 50-day? I got a feeling we're going to wake up next week, sometime next week, and IBM's going to be much higher. Maybe I'll take some shares just to track it. Let's see, IBM. All right, so, I mean, it's in a pretty tight range, 132 to 135. All right, so it's a $3 range. So if I can take a $3, $4 stop, looking for $8 to $10 upside, yeah, I'll do that. Let me just buy some IBM here. IBM, it's just dipping here too, IBM. All right, so, all right, let me buy some shares of IBM and get filled right here at 135.50. Filled at 135.50. IBM bought some 135.50. Okay, IBM. Okay, this could come back a little bit more, so there's no hurry. We could come all the way back to, say, the 90 MA or even inside of yesterday's price action more. But I like IBM. I was liking it a week ago, and when it had those three little candles there, when it looked like it was going to break above the 90 MA, I was looking to buy some IBM. The gap down on earnings, sideways. It's already down a few percent. Okay, so on the pullback from 151, that's 14%. That's not bad. Okay, so 14% discount. And let me just check fast graphs for earnings. I think we said it was trading at fair value, if I'm not mistaken. IBM. Okay, earnings whisper said they missed on earnings by 1 penny. And revenue was flat. Let's see, what's revenue forecasted to do? That's more interesting. IBM. This could prove to be a losing trade, so don't. I would maybe wait until next week to see what it does, but I'm just going to track it here. IBM. I like it. Okay, it's trading at fair value. IBM. Fair value to EBITDA. It's trading at a slight discount to free cash flow. IBM. And it's trading at fair value with earnings forecasted to move slightly higher. Not a barn burner, but certainly a big cap, big blue. Price to sales is a slight premium. All right, so EBITDA, free cash flow, EBITDA, and operating earnings are all at fair value. IBM trading at slight premium to sales. And the price has already pulled back 13, 14%. So I'll give it a $3 or $4 stop. Probably wouldn't give it that much. If it were to close below today's low, I'd probably be out. Today's low is right around 133 and change. Let's see. Low is 133.50. All right, so all right, I'm going to adjust my stop to $2. If it takes out today's low, then I'm done. But looks like the interest is starting to pick up. MACD's crossed, stochastic's rising, RSI is rising, so we'll see. That would be classified as a boredom trade because I've been looking at IBM for a while, but I'm bored. We had AbbVie as a winner thanks to EZ. That one, the calls went from 8 cents to 60. I think it even hit a 70-cent offer. I don't know if anybody got out AbbVie at 70 cents. But the 152.50s for today's expiration, more than 600% gain. 152.50s are still at 40 cents. 21,468 of those contracts. 152.50 for AbbVie. If it does bounce, it's starting to bounce right now. It's got an offer of 40 cents, the 152.50s. Those earlier were pointed out by EZ in the trading room. When it was trading about 8 cents per contract, it's up to 40 cents and hit a high of 70 cents offer. I don't know if anybody got filled there, but that did very well. All right, SPY making a higher low. I'm not putting much thought into it right now. SPY would need to blast through 408 to indicate that, we won't possibly see downside on Monday. Not that I have a crystal ball. I'm just thinking that I would like to see a close green on the day, a doji, and a bullish candle at the 21-day versus a bearish candle. SPY. Okay, so I'd like to see a bullish candle here and a follow through. A 3-candle reversal would be awesome on Monday to see the 3rd candle. So 3-candle reversal, bearish day, doji day, or spinning top, and a bullish day on Monday. There's still a lot of reasons to think that the markets are very strong. We've had a recent pullback. Look at advanced decline percent. I love when I see this. You've had a pullback with the week. We're above the 200-day. 50 days crossing up. And you got all of your advanced decline percent indicators in an oversold territory. Minus 10% is fine. Love to see minus 30, but I don't want to get all the way down there. Looking for them to hook upwards. That's starting to confirm what I'm thinking. My suspicion is that, with everything else that's going on, people are very bearish, generally speaking. Options traders are something more bearish than bullish at the present time, as indicated by the posts that Mikey's been throwing in the room. So, yeah, I'd like to see this. Area hold. So with advanced decline percent pulling back and then reversing. It's kind of lining up with what I'm seeing. I don't want to see what I'm hoping to see. I don't want to try to find indicators that are confirming what I'm looking for. Conversely, I just want to look at the indicators and see what they're telling me. So this morning we had Michigan consumer sentiment come in at 66.4. Previous was 65. What was it? Previous this morning was what's today? The 10th. Okay, 10th. Previous was 64.9. It's 66.4. That's indicating people are getting a little bit more okay with the markets. This big turn is a big deal to me. The way I look at the markets, when you get to extreme bearishness and everybody's on the same page, the trade is too crowded. I'm looking for a bounce. Same thing with AAII bull bear. All right, when it hooks like this, I'm looking for more bears to capitulate. Doesn't mean we're going to go straight up by any means, but this is definitely looking a lot better. Here's 1990, 2009, 2020, and 2022, the turn at the end of the year, aligning with everything that we're seeing so far. With that, just keep in mind that if we do close red on the day below VWAP or near the lows of the day, I'll probably put on SPXU again. Took it off this morning. I said it wasn't a day trade. It wasn't. I decided to swing it overnight just in case it got really bad in the morning. Okay, where Doji, I made some profit on that trade, on that position. So depending on where we close tonight, I'll either put SPXU on again and hold it over the weekend, take more profits off. Looking for AbbVie to get back up to the highs. But yeah, I'll put on SPXU again. And maybe buy some puts for next week. I don't know. I haven't decided yet. VIX is still pretty tame at 2094. All right, back below VWAP. All right, so not going to make this easy. Not going to make it easy. Yeah, I'm not really interested in doing much. Yeah, IBM's pulling back a little bit more. Doesn't appear there's a lot of people interested in IBM at the moment. They're more interested in healthcare today. Energy and healthcare, getting a good bid. Merck, what's Merck doing? Merck. Where are you, Merck? There you are. Merck, good. It's making higher highs, higher lows. If you recall, if you've been paying attention to Merck over the last couple of weeks, notice that week Merck would pull back during the day, and All right, sorry, my wife just walked in the office and interrupted me in mid-sentence. What I was trying to say on Merck was that if you've noticed, recently, Merck would fade the high of the day pretty early in the day. We're not seeing that today. Or let's see. All right, so yesterday, yes, there was a fade. You see that? Go to 5 minute. All right, so generally speaking, Merck will run up in the day and then it'll fade towards the evening session. Yesterday, ran up in the morning and faded the rest of the day. Today, it's at the high of the day. Now, I don't want to jinx it, but that's something I noticed right off the bat. Okay. Now, if we can manage to hold on to this, if we don't start to head towards VWAP, this trades on the floor of the New York Stock Exchange. So, you got these floor traders that maybe want to take profits and they'll just bring this back a bit. I don't know. Let's keep an eye on Merck though. It's definitely looking good. Okay. All right, I might take a little bit of Merck off here, actually. I'm just looking at it, looking at the options that are trading today. All right, maybe I'll take some Merck off. Probably headed to the 50-day next week. Carvana's bouncing off the lows. AbbVie trying to hold on to 152.50 area. AbbVie. SPY is flat. I've never seen an advertisement for Department of Corrections. State of Georgia is advertising for corrections officers. Apply now on Bloomberg. Wow, that's weird. That I've never seen. All right, so SPY pulling back some more. So if you got puts on, again, I know I'm repeating myself, but if we close down here near the lows, I'll put on SPXU. I'll swing it again into next week. Okay, AbbVie, I'm out of the next week's calls. All right, all out for now. AbbVie, I'm all out. Okay. I didn't want to go green to red. It was a successful trade. All right, so there's that. All right, so we could still bounce. I just want to take that off. One less thing to worry or to be following. Looking for SPY to bounce. AbbVie, I still have shares. AbbVie, I still have shares. Okay, make sure you check all the stocks or options that you have that are expiring today. Make sure you check in. Today's 2/10, February 10th. All right, so earlier I was talking about SPY, and if they showed up after 2 o'clock to start buying, if they, institutions, hedge funds, whatever, started to show up buying, I'd be looking for it after 2 o'clock. Right now it's 2:30 on the East Coast, 2:33. This is your host, Cousin Vinny, coming to you from theclosingprint.com. All right, watching for institutions to buy the dip. If they do, it's a good place to look for buying. All right, so far we've seen selling this week. Tuesday we had a nice bounce. Wednesday, Thursday, Friday was all selling, above average. So if they close this green, that would be a green bar for the day. So that would be nice. The weekly still looks good. Still in an uptrend. Still following the 10 EMA. 10 EMA is pointing up and to the right. We're not going to go up every single week, unfortunately, every single day. Obviously, I don't think anybody in the trading room expects the markets to go up every single day. That's why you want to buy the dips. That gives you your best opportunity and a bullish trend. However, as I mentioned to one of our members who got a little bit over their skis this week, they were trading. This is the SPY. When this trader was getting long in September, October, they told me that they did very well. They did very well during the October in through Thanksgiving into the first couple of days of December. They did very well. They were up like $25,000. No, actually, I think he said he was up $50,000. And he got too carried away and didn't see that resistance level at anchored VWAP, that red line. And then you see those two down arrows. That's a double top right at VWAP, at anchored VWAP. That goes back to January 2022. And he didn't understand why the markets weren't continuing to make higher highs and higher lows, and why his trade all of a sudden his strategy stopped working. Well, it stopped working because they were taking profits. We were consolidating, and then we dropped down to the standard deviation 1 bands where the candles went from red to yellow and started rallying again. In which case that was another long setup coming into this week. Now, trading this week like you might have been doing in September, October, November, or December through January, trading the same style this week, strategy would have chopped you up. Just would have chopped you up and spit you out because we haven't gone anywhere. So right now you can see those blue bars on histogram in the lower panel. That's telling me consolidation. Blue candles tell me consolidation. When we start seeing cyan again, we can expect to see maybe a follow through. For now, so that's all I'm looking for is consolidation until they tell me otherwise. So we'd have to bounce pretty furiously to change my mind as far as consolidation is concerned for this week. So you can't go long every single day just at the low of the day just because, I tell you buy the dips. You have to recognize what the markets are doing too. I don't think anybody in the trading room, maybe a small percentage, most of you get that. And with Mikey posting and Money Magic posting levels, you should know where you could expect to see resistance and where you could expect to see support. Right now, we're looking for support right in this area. So if we don't get it, that's why I'm going to start hedging again, going over the weekend, expecting that I could drop it below the 21-day before being comfortable. Hopefully, we hold the line right here and we produce a bullish looking candle. It's a doji spinning top right now. Come into the trading day on Monday with a bullish day. That's what I'm hoping for. Okay. But hope isn't a strategy. We'll hedge if we need to. All right. So I took AbbVie off. AbbVie. All right. What's AbbVie doing? AbbVie is still very strong. Merck is still very strong. Okay, Apple's just sitting down here at 150, squeezing, killing theta. Alrighty. Soundhound, Kerplunk, that one's lower. Soundhound, that's not going anywhere today. Soundhound, down 30 cents. Penny stock. Okay, I'd love to see them run this into the close. Kind of remote. 408's been resistance. It probably remains resistance, but a close up here, if the bulls are going to get anything out of this week, aside from Tuesday's price action, if the bulls are looking for something to tee it up for next week, we need to hold the 21-day, and that candle needs to turn from red to dark green. I know you can't tell if that's dark green. Maybe you can see that it's dark green. A white candle, if you will, needs to turn, the outside of it needs to turn dark green. And that would happen if we close a little bit higher. We're 15 cents off right now, SPY. So that's what I'm looking for right now. So a positive close would be a good setup for the bulls next week. Bill, I think Mondo was joking. I don't think he's ever serious, except when it comes to like a trade. Okay, so right now I'm just waiting for SPY to give us a little bit more positive price action. I got 2 dead cats in my room. They're just laying here, and I just woke one up, and she's not very happy about it. She's sleeping. Can you leave me alone? All right, I'll leave you alone. Lazy cats. Bed Bath & Beyond turning off the low. BBBY turning. Tell you what, if I see one more Sling TV ad, I'm going to sling my TV out the window. My God, they're like beating me to death. Sling. I tried it once. I wasn't happy with the service. I tried Hulu too. I tried Hulu, and I didn't like the ads, so I paid for the extra service, and I still got ads. I wound up canceling my Hulu service. I was just going to check it out because there was something I wanted to watch. I forget what it was, a series. So Come back. We got it fixed. We got it fixed. You won't see ads if you pay extra. Yeah, okay. Fool me once. All right, so today's sort of a dead day, obviously. You had some opportunities. Those were fleeting. AbbVie is still holding up very strong, so that's a good sign. AbbVie, I have shares. I might double up on shares. I wouldn't mind getting up to a couple hundred shares of AbbVie. And moving higher, so it's looking good. AbbVie's been a good week. It's been a good week for AbbVie. Yesterday, rather, the past 2 days, I should clarify that. AbbVie, past 2 days have been good. We came back down. AbbVie bounced back above the 21-day. So it consolidated at the 200-day. I'm looking at a lot of stocks. Look at your favorite stocks. Are they above the 200-day or are they below the 200-day? Even Google, with its snafu earlier in the week on Monday, even Google, I'm looking for it to hold the 200-day or 50-day rather, get back above the 200-day. Apple, okay, it's above the 200-day, looking for that to hold. Meta had the gap up. What's it doing? All right, Meta faded into the gap, so I told you that I would be bullish above 180, bearish below 180. And the watch list, I'm pretty sure I said that. The watch list, let me just go double check. Meta. Bullish above 180, bearish below 179. Okay, so that's what I said in the watch list. Meta started out the week, looked pretty good. It was holding on, and then on Wednesday it started to leak, and then yesterday, of course, everything dropped. So Meta is a short back to 150, the 200-day. But even Meta is above the 200-day. Meta's above the 200-day. So check your favorite stock. Is it above the 200-day? Is it below? Because 75% of stocks, or a little bit lower, are above the 200-day. Let's just go check it real quick before I misspeak. Always want to be accurate. S&P equal weight index. Okay, number of stocks above their 200-day is at 70%. All right, so it was a little high. 70% of stocks are above their 200-day. Now, the reverse is the case too. At some point, we can get a bit overbought. I would say above 80 to 90% of stocks when they're above the 200-day, and we get the number of stocks above the 50-day in the upper panel back into the red zone, then I'd think, okay, it's probably time to start taking profits off into strength again. I'm looking for a higher low, a bounce. We're above the 200-day. We're above that trend line break. That goes back to January. We're above the 200-day, the red line. 921, 50-day, and 200-day are all stacked, one on top of each other. That's the definition of a bullish trend. And you should expect pullbacks, 3%, 5% normal. 10%, I think 2 per year is what the number is. 10% pullbacks a year. Maximum, okay, maybe 1 a year is better. But that looks good. All right, and again, I showed you this earlier. Advanced decline percent had drifted down to below zero line. It's at minus 10%. In addition to stocks being above the 50-day and a 200-day, you've got Breath had pulled back this week. Now it's bouncing. That's not a reason to go long, but it starts to add up. These all start to add up. Okay, let's see what VIX looks like. VIX is at 2095. Skew. All right, let's think about skew for a second. If institutions were concerned about the markets, they'd be hedging like crazy, and that line would be above the 135 level. See that right there? Okay, we're in the lower part of this chart here. Above 135, institutions are hedging. You can see over here in 2021 into the peak in 2022, they were pretty elevated. They were hedging into 2022. And then as the bear market started to unfold, they started taking some protection off, and I imagine they were trading more bearish positions. But we're below 135. That's telling you hedges funds are not hedging as actively. Okay, that's skew. VIX VXV. Whenever VIX VXV gets to extremes, we start to look for reasons to reassess our positioning. Right now, it's in the neutral zone between 90 and 92. Nothing there, nothing to see. VIX. Okay, as far as the big range, you can see those horizontal lines, those horizontals. You can see that we're in the lower half. So there's a possibility this could shoot up above the midline around 28. Okay. And some of you have already taken UVIX calls, like Yoda took UVIX calls. Some of you bought UVIX straight away, Brother Bill and Prism. I have shares as well. But that's purely hedges. That has nothing to do with what I'm thinking the market's going to do next week. All right, so that's that. VIX. Okay, it's red. So whenever we see red on the screen with this particular indicator, we're looking for lower lows and lower highs. So you can see the VIX line is starting to come up and probably would surface to green by next week if this keeps up, in which case we'd start looking for higher highs and higher lows. Right now, markets are moving sideways, chopping in a range, reinforcing the idea that we're consolidating the gains that we started from December. It's like that's like 7-8%, I believe it is, S&P. From the no, it's more than that, right? I believe. Let's see. So we trend and we consolidate. Trend and consolidate. Should always be thinking trend and consolidate. Are we trending or are we consolidating? Always ask yourself that question coming into the week. Okay. So from the December low, the January low, the start of the year, that peak, we made 11% gains. We're off 3% from the high. Okay. So you can do the math. That's 8%. We still have an 8% gain. Now from October 13th low, the markets have made it up 18%. All right. So you're still up 15% since the October 13th low. So if you're a swing trader or an investor, you shouldn't be that concerned. Now, if we were to lose the 21-day and we get another candle like this one over here, right above that October 13th indication, those two big red candles that dropped down below the 50-day, even those reverse back up because of the bullish trend that was starting to unfold in the markets. The 50 days turned up and to the right. At that point, 50-day was pointing down along with the 200-day, the 9, the 21-day. But this looks nothing like this over here in the last week of October, those two big red candles. Yes, we got a couple of red candles, but we also made an 11% gain from the beginning of January up to that pivot high. So you'd expect to see some consolidation in this area. Consolidation comes in two forms, either a pullback or sideways in time. We kind of got a little bit of both. All right, so, all right, I'm going to stretch a little bit, take this mic off.
High took alert plus 800.
There you go. Here come the bulls. And what time are they doing? After 2 o'clock? Just shy of 3. Now, Mikey will probably tell you that puts are being monetized, but I see a lot of calls that have traded again today, Mikey. I posted in the room before, like several hundred thousand contracts trading and multiple strikes. The 410 calls alone that expired today, 210,000 contracts. All right, nice follow through. Okay, stalling shy of 408. Okay, we're green on the day right now if we can manage to hold this. Yesterday, we marked this chart up. We made down to the lower trend line. We're still below the 20 EMA, so that needs to correct itself. Okay, we need to get above the 20 EMA. S&P 500 weekly time frame, Kumo chart showing that 4,200 level as well. That large flat line is telling you that's resistance. Above that would be a Kumo breakout.
Hi, took alert plus 800. Hi, took alert plus 800.
All right. Less than an hour to go. Markets are just sitting here below 407.75, 407.75. Okay, we continue to push a bit higher. All right, so we're still underneath this 408. We're not able to follow through yet. All right, so we're pulling back from this area here, SPY. Still sitting on top of 21 day. To repeat myself for the 10th time, if we close down below VWAP, I'll probably put a hedge on for next week. SPXU, already have UVIX. That's not doing anything. Flat VWAP all day, higher and lower.
Market on close. I'm Renita Young in for Oliver Rennick, and let's get right to our next guest. I'm going to welcome in Marvin Owens. He's the Chief Engagement Officer of Impact Shares. You're also former Senior Director of Economic and Development at the NAACP. Thank you so much for joining me, Marvin.
Great to be here. Thanks for having me.
Excellent, excellent. So let's start first with the indexes that you're responsible for. The ticker NACP, it tracks the Morningstar Minority Empowerment Index, and it's designed to provide exposure to U.S. companies with strong racial and ethnic diversity practices in place. Some of the companies in the index, in the top 10 holdings, NVIDIA, Apple, Amazon, Tesla, ExxonMobil. What goes into choosing the companies that are in this very particular, very specific index?
Thanks for the question. Take a couple steps back. Impact Shares is a 501c3 registered investment advisory ETF issuer that was funded with the support of the Rockefeller Foundation. And so our goal and our mission is to work with leading environmental and social advocacy groups to translate their missions into investable products. The first one we launched was NACP in partnership with the NAACP. I was at the NAACP at the time, and we had a historic engagement strategy of corporate scorecards in which we would engage corporations and really measure their commitment to racial equity through their internal policies. And so what we've done essentially is taken that strategy and applied it to publicly traded companies in the Russell 1000. Offering ethics, a number of policies, gender pay equity policies that we see are the key issues around racial equity and racial justice. And of course, these criteria are provided by the NAACP. The goal here is to really point to what is a platform of engagement where companies can really understand what it means to be really committed to these kinds of issues.
All right. All right, SPY just sitting here, not going anywhere. Flat VWAP. Kind of boring, I know.
When oil went negative back in 2020, you had a great call when it was below 20, saying it's going to go above 40, one of the first early calls. Very quickly, what are you seeing in oil here? It's really not responding as bullishly as you'd expect to that Russian news.
I agree. In 2022, if we would have heard some news like that, we would have gotten a $20 rally, not a $2 rally. So everything's a little bit weak, in my opinion, based on this news that we've heard today. That said, I'm not bearish crude oil, but I've been doing this long enough to know that markets tend to seek the most pain for the highest number of people. And so the pain trade would be a sell-off to retest the 70, I think even the 68 area, because we need to run some stocks down there before we get a sustainable rally. It's hard to find any bears in this market, but so again, that would be the pain trade to actually sell off before we rally. In a bigger picture, I think 70 to 95 is the range for the rest of the year.
Okay, and speaking of trades, you have a risk reversal there on natural gas. Great stuff as always. Carly Gardner of Carly Trading. Thanks for joining us for Options.
All right, so we have a little bit more than 35 minutes to go.
President Biden's billionaire tax on the wealthy outlined this week in his State of the Union address may be dead on arrival in Congress, but on a state level, it is gaining traction. Lawmakers from 8 states, including New York, California, Illinois, and Hawaii, are among those pushing bills to tax wealth and income. Joining us now to discuss, CNBC's Robert Franken. I mean, Robert, those states I just mentioned are ones that are already suffering some out-migration, have already struggled to keep wealthier residents
embarrassed a little bit by the recent Bard fumble.
Looks like 406, 407 for a pin for now.
And the internal repository, which is normally kind of joking and funny, this week it took a more serious tone.
It's fascinating. So do you get the sense that there's embarrassment because of how the rollout was handled, or does it go deeper into maybe Google's just not prepared for this technological shift, and maybe the products themselves are not ready, or the organization was not really in place to capitalize on it?
Yeah, well, I think that it's a combination of everything you had just mentioned, particularly with the Bard rollout. On Monday, they announced Bard, confirming our reporting from last week. And that didn't have very many new details. And then they said they were having an event the day after Microsoft's event. And then that also didn't have any details, and it was sort of disorganized and disheveled. Then their own promotional video advertising Bard had a mistake in it. And so all of these combined really made for a bad week in how employees view leadership. But it's been, they also threw some words back at CEO Sundar Pichai, saying, how is this keeping focused? This is seeming like a rushed reaction to what Microsoft is doing with ChatGPT. And you just told us in December, according to an all-hands meeting that we reported, that, you were going to, it was going to take time. They needed to slow down because they could do reputational damage if everything wasn't correct. So they sort of felt like it was a little bit of a backtrack from that as well.
Yeah, it's all fair, and I guess look, the culture there is one where employees have a voice, and I guess this is kind of hard. Consumer has been mixed on earnings calls. Up next, MasterCard's Michelle Meyer joins us with her view on the state of spending, including some surprising areas of strength. We'll be right back.
All right, I'm trying to bounce a little bit here. Just chopping around with no particular place to go. End of the week. It was a pretty good day on Tuesday. Wednesday, Thursday were choppy. Today was choppy again. Zero gammas at, what is it, 4,100? 4093. 4093 is zero gamma. So I'd like to see it above 4093 by the close. I doubt that's going to happen. We're at 4083 now, so we need at least 10 more handles. Can we get 10 handles out of this? We're in a negative gamma state, so as long as we stay below 4093, zero gamma, there's a higher potential that selling will exacerbate downward moves in addition to all of the zero day options that we have.
The American consumer has been under the microscope this week as Wall Street awaits Tuesday's CPI report and retail sales data on Wednesday. Today, the University of Michigan released its consumer sentiment number, showing it at a 13-month high, but companies have sent mixed signals about shoppers. Ralph Lauren, Tapestry, Affirm, and Capri all reported earnings this week, and so are their customers taking more precautions over the past quarter. Ralph Lauren says they're feeling the inflationary pressure and having to be more discerning on their spending. On the other hand, MasterCard, Kellogg, McDonald's, and Mondelez are seeing the opposite. Kellogg saying the consumer in their space remains incredibly resilient. Meantime, MasterCard's own Spending Pulse report came out today showing retail sales in January were up more than 8% from a year ago. Joining us now is Michelle Meyer from MasterCard Economics Institute to talk more about these numbers. 8% is pretty strong.
It's pretty strong.
By pretty much any standard. Where is it coming from? And does this look like a trend or is it a blip in January?
It's not a blip. You know, it's been pretty trend-like, strong spending on a nominal basis, but it really does differ by category. So that's the big story, this bifurcation in how consumers are spending, where certainly dollars are moving towards travel, towards experience-based spending, where some of those goods categories are seeing a bit more of a challenge, particularly those tied to the housing market, which we all know has been really problematic.
Yeah, I mean, and just to break it down, I mean, restaurants, I mean, I guess we're a year past Omicron, right? So January of 22 is maybe a depressed level, but still, to your point, I mean, where are you seeing the big jumps? And, you know, I guess what does it mean for the underlying condition of households right now?
Yeah, well, I think there's the first big picture takeaway is that consumers still have the ability to spend. And that's very much consistent with the health of the labor market. Look at the
All right, so even if we do move up to the, actually the good thing is that we're going to close green on the day if we keep this up. Green on the day would make this daily candle look a lot better. Okay, it's no longer red. We're above the close, the bottom of that body of yesterday's candle. So a move above the 9 EMA would be even better, 4,100. I will not put on a hedge with SPXU if we close up here. I will not.
There has been some concern, I guess I would say, whether it's placed correctly or not, about the uptick in credit balances. So this idea that aggregate consumer credit has taken a big jump, but if you look at it longer term, it's really just coming back to the trend.
So that's what I think is important, is to not look at the month-to-month or quarter-to-quarter changes, but to think about where we are in this credit cycle. After the pandemic, consumers did an amazing job balancing their balance sheet, paying down debt. They had disposable income, really getting to a point where debt service and financial obligations ratios were really low. And then the last year and a half, in the face of higher inflation and less new stimulus coming in, we did see consumers, start to adjust their balance sheet. And if you look at the Federal Reserve's data, credit card balances have increased. But the overall picture just shows kind of a timing shift in terms of how people adjusted their balance sheet.
I assume you would expect, if in fact the economy is going to continue to slow in aggregate.
I added Boyle.
Somehow these recession calls look like
Boyle added $6 calls for June.
Has to slow down. I mean, that's just the way the math has to work, right?
The 616 strike, $6 call for $2.40. Look at this to reverse and head back towards a 21-day. Looks like it's basing. I would have I'm going to put about a 50% stop. Let's see, $1.40.
Years, in part because of these COVID distortions. So that's what we're going to return to, an economy that is more normal, that is more trend-like. And the hope is that we can do that in a way that is pretty, stable. But of course, it's a hard job, and that's the job that the Reserve has right now.
Well, exactly. Yeah. And I guess the question is, do they target those areas that most directly hit the consumer, right? I mean, if they feel that they have to soften up the labor market a lot more, there's even talk, look, if inflation comes down, real disposable incomes look pretty good. So people are going to keep spending.
Right. So, it is this balance when you think about the Federal Reserve's dual mandate. It's price stability, it's full employment. And they're not meeting either right now. Yeah. Inflation is still too high and the unemployment rate is still too low when you think about a steady state or, a stable economy. But they've done a lot already. And they are talking about the idea that they need to be more data dependent now. They're no longer as behind the curve as they were before. So, the Fed, listen to the Fed speakers throughout this week. They're not done. They're going to continue to move accordingly until they feel like they've reached their mandate. But part of that does take out, where there's been excesses in the economy. And the labor market, there's been some excesses built.
Sure. Yeah, we'll see where it goes from here. And housing already feeling it. But Michelle, great to talk to you. Thank you.
You as well. Thank you.
Thanks for coming down. Here's where we stand in the markets as we get toward the close. The Dow is up 154. S&P 500 now again in positive territory, up about 5 points. NASDAQ underperforming still and the Russell 2000 also peaking into the green. Adidas is sinking today as the company outlines the big cost of its breakup with Kanye West and its Yeezy brand. We'll break down the new morning next. And you can listen to Closing Bell on the go by following the Closing Bell podcast on your favorite podcast app.
Yeah. All right. So SPY continues to push higher. SPY pushing higher.
Early market on closed imbalance, 347 million to the sell side.
UNH, nice trade. I like it for 50-day. I like it for the 50-day test, 507. And you got the 200-day just over that. Looks good. All right, we got 20 minutes to go. 19 minutes to go. Can't get over it. 70 degrees here in Myrtle Beach. 70 degrees.
The split between Adidas and Ye, formerly known as Kanye West, is starting to manifest in money terms as the company outlines the potential cost in its preliminary outlook for the year, sending Adidas stock sharply lower. The unsold Yeezy stock could lower revenue by 1.2 billion euros, and if it fails to move those products, operating profit could drop by 500 million. Adidas also expecting one-off costs of up to 200 million euros. In a press release, newly installed CEO Bjorn Gulden says, "The numbers speak for themselves. We are currently not performing the way we should. We need to put the pieces back together again, but I'm convinced that over time we'll make Adidas shine again. But we need some time." And this is not the only partnership dragging on Adidas. Earlier this week, it was reported Beyonce's Ivy Park clothing line is suffering from weak sales. All right, shares of Lyft losing around a third of their value today following weak guidance and a slew of analyst downgrades. We'll break down that quarter and why it differed so much from rival Uber. That story plus Expedia's CEO weighs in on hopeful travel signs and a new activist in Spotify when we take you inside the market zone.
Mm-hmm.
Early market and closed imbalance still sitting at.
All right, SPY driving higher now. SPY. I'm going to get a nice solid bullish candle today. That's a good thing. That's a good thing. I'd like to see us close at the high of the day. That'd be awesome. Still think we could see some downside. I mean, just given by the momentum, MACD turning, stochastics turning down, RSI here. But if we turn out to be a 3-candle reversal off of support, 405, and we pop on Monday, we'll see. Boil at the high of the day. Boil. B-O-I-L, Boil. I added to my calls on Boil. I have June calls. Pushing higher, Boil. All right, check your calls, check your puts. If there's anything in the money you don't feel like getting assigned, you might want to check that out before the close. I have so much cash accumulated, I could get assigned a couple hundred shares of SPY if I have to, but I don't want to be lazy.
We are now in the closing bell market zone. Barbara Duran from BDA Capital Partners is here to break down these crucial moments of the trading day. Plus, Deirdre Bosa on Lyft's earnings disaster and Seema Modi on Expedia. Barb, it's good to see you. This week, down the S&P 500 after a pretty good run. NASDAQ coming off the boil a little bit too. What's your read on it? I guess all deep pullbacks start with modest digestion, but how does this feel to you?
Well, this does feel like normal consolidation. It doesn't feel like a bear market is resuming and we're going to go even lower and deeper. I think this feels normal after such a big start. I mean, I think you yourself were annualized. If we kept up that rate, it would be 100% in the year. So we knew that couldn't persist. And I think in the initial spring was because of all the cash sitting on the sidelines. You had tax loss selling, you had bearish positioning. And of course, with the numbers coming in, it's clear the economy is slowing. But CPI data is looking promising. We're going to find out next week. I think the 500,000.
All right, SPY running here. SPY running.
Last week spooked everybody.
Ooh, nice.
But there's indications the consumer is aligned
With 12 minutes to go for the closing bell.
Wages are high, but moderating. And we probably got, by some estimates, $1 trillion in unspent stimulus savings that is really boosting people's balance sheets.
And yet within the relatively modest kind of churning action of the indexes, some pretty big moves and some pretty big stocks. I mean, Alphabet down 10% on the week. I mean, Tesla was up big before we got to today, but you've actually found your way to adding to Google at this point, even after the doubts about, I guess, the long-term competitive position of the
Nice follow through here.
And I think, maybe I'm a little bit early in adding. It's been a core position for some years for me, but I really see this as akin to when Elon Musk inadvertently smashed the window on the car he was demonstrating, or the truck, the Cybertruck, which was rather embarrassing, but the stock went on from, $50, whatever it was, to much higher. So I see this more as an embarrassment because I think it's more, there's no question that Google has the AI tech, they have the resources to do this thing right. And, they certainly botched this early thing. The employees are upset. But I think that in the long run, it is going to be very hard to dislodge them. They've got the power and the resources, just to stay the course. So I think any more weakness is a good buying opportunity, particularly because the PE is down to historical lows.
I was just going to mention it basically trades at the broad market PE
Just
for the
taking a look
first
at the
time pretty
market on
much ever.
close, currently sitting
I
at
guess.
400 million to the buy side, just waiting for the
Crashing
final
after
order.
first quarter guidance came in short of estimates. The rideshare company blaming seasonality and lower
Market on
prices
close
for the
imbalance,
miss.
1
Total
billion to the
rides
buy
for the fourth
side.
quarter also well below pre-pandemic levels. That is a far cry from rival Uber, which reported earlier in the week that company crossing 2 billion rides in a quarter for the first time ever and guided for at least 20% growth in gross bookings in the first quarter. Let's get to Deirdre Bosa to break this down. I mean, what's the big conclusion we draw from vastly divergent fortunes here between these two companies?
The conclusion we dropped there had to be one is that Uber's pulling away, and this is all about market share. Previously, it was thought that maybe this would be a duopoly. You have two major players here in the U.S., Lyft and Uber, but over the last few quarters, Uber has just been pulling ahead. Look at how both companies talked about being past the pandemic. Uber said that the pandemic effect was well behind them, and they're going to continue to deliver adjusted EBITDA profitability and free cash flow. Lyft, on the other hand, their active riders are still 11% below pre-pandemic levels. Their adjusted EBITDA targets were taken way down, shocking the street. One analyst said this was one of the top 3 worst analyst calls that he has ever listened to, a debacle for the ages, and that's really what it was. Mike, you said that they talked about seasonality. They also talked about lower prices, but it comes down to competition, which is code for market share, and that is where Lyft is losing. And that's why analysts are concerned about the long-term proposition of this story, how it's going to win that back and at what cost, and who's going to help them maybe.
It's interesting, Dee, because not only you see the relative performance is really stark right now in favor of Uber, and obviously the performance is better. But I also wonder if there's an industry that's not big enough for two players that were both in early. Are the underlying economics of the business actually any good? I mean, Uber from start to now has burned billions of dollars. It's not as if it's been sustainably profitable on a bottom line basis. I just wonder if they have the line of sight to when that actually does turn for them.
It is a great question. Is Uber just sort of a better house in a bad neighborhood? And you're exactly right to talk about that gap profitability, because yes, they have us.
Nice trade there, Brian.
Got adjusted EBITDA, free cash flow, stock-based compensation still makes a huge portion of that. Uber lost $9 billion last year, to your point. Lyft lost somewhere around $1 billion, I believe. And the unit economics, I mean, Uber's tried to show us a path of how they get to bigger free cash flow and eventual gap profitability, but we don't really know how they get there. And this raises questions about the competitive landscape going forward, right? It's always been kind of a race to the bottom. If Lyft is out of this market eventually, prices are probably going to rise for all of us. And what kind of valuation do these companies deserve? Does Uber ultimately, even if it's number one, is it a transportation company, a taxi company, or is it a technology company? I don't know if the margins are there for a technology company in the long term, but that's what the street's trying to figure out.
Like a mobility utility of some kind. Barb, either of these stocks tempt you here?
Well,
Hi, Tickler plus 800.
I think the differentiating thing, if you remember when we went into the pandemic, both Lyft and Uber were vying, very closely. Uber had worldwide more share, but going to the pandemic, Uber had something obviously Lyft did not, which was through delivery, and that saved them. And I think that left them very well positioned for reopening in terms of having the resources.
All right, we got 7 minutes to go. Regular session, 7 minutes to go.
They started the loyalty program, cross-selling, all sorts of ways to increase customer frequency and use. And I think it's going to be very tough. I don't see how Lyft can catch up. If they compete on price, you still have a big problem. People will choose one or the other based on price, but not if it's like a minute for an Uber versus 10 minutes for a Lyft. And I don't see how they have enough cars and drivers to close that gap. So I think pricing, they're going to have to be competitive on pricing. That means bad margins, and it is hard to see how they're going to turn this around anytime soon.
Yeah, Lyft down to under $4 billion in market cap versus 68 for Uber. Pretty dramatic. Deirdre, thank you very much. Meantime, Expedia falling after an earnings miss. Severe weather in December deterring travel and leading to a spike in cancellations. But CEO Peter Kern says he's seeing improvements in the first quarter. He sat down with Seema Modi earlier on CNBC.
Trends have been really strong since January. We said in our call that we're seeing over 20% lodging demand, which is considerably higher than where we were in the fourth quarter, even ex the weather. And so there's just been a ton of demand. APAC is starting to come back quite strongly. That's helping in our B2B and our B2C business. Still our business relatively, but that's been quite strong. And generally, the market's been very robust across the Western world and Asia and LATAM.
Seema Modi joins us now. Seema, pretty upbeat message there from Peter Kern. However, the market is clearly not pleased with the results. Is there a disconnect here, or is it just last quarter's results are coloring the interpretation?
Well, I think what's providing a floor on the stock, Mike, is the fact that Expedia is guiding for double-digit revenue and EBITDA growth in 2023, despite the fourth quarter miss, which you heard there, Peter Kern just chalks up to bad weather. And the other big concern will be around the increase in marketing spending in total of 20% compared to 2019 levels. There is some evidence that that is working. They're seeing record app usage. Loyalty membership is up over the last 4 years. But that will likely be a concern for Wall Street as it fixates a bit more on profit growth going into the new year. One of the downside risk scenarios brought forward by Oppenheimer this morning was if we start to see the airlines and hotels really push for direct bookings a bit more aggressively than we've seen in the past as they focus on this travel recovery, and how that could change the market share dynamics and put more pressure on the online travel operators like Expedia, not to mention Airbnb, which reports next week, as well as Booking Holdings, as they all sort of increase that marketing spend, Mike. Seeing the stock down still about 8%. Should point out, though, it had a really good run even prior to yesterday's release, up about 35%.
It did have a bit of a snapback coming into the report for sure this year. Seema, thank you. Well, Spotify shares higher today, while other tech names drag. Activist investment firm Value Act has taken a stake in the company.
4 minutes to go.
Today, the CEO calling Spotify Value Act's newest investment, but not revealing the size of that investment. Shares of Spotify are up more than 50% this year, but still down 25% over the last 52 weeks. Let's bring in Julia Borston, who covers Spotify, and maybe put it into context with, Value Act, not always a hostile or even often not a hostile activist investor, and Spotify already, doing some things strategically and on the cost side that investors might want to see.
Mike, this is all about cost cutting, as it often is, and sort of echoing what we saw with Nelson Peltz pushing Disney to cut costs around its streaming service. I want to just give a couple more details about what Value Act said when it disclosed that stake today. It said that Spotify's costs have exploded, and now is the moment for Spotify to differentiate between what was built for the bubble and what was built to last. I think that's what is really coming down to here. I think it's worth noting that Spotify has done cost cutting. They announced that they were doing layoffs, and they're really focusing on building out Spotify's platform, figuring out cost efficiencies. They have this big event that's coming up in a couple of weeks, their Stream On event that's set for March 8th. And I think we're going to be learning more when it comes to that event about their roadmap. But I do think that Daniel Ek has made it very clear that he cares about cutting costs and focusing on profitability, which does seem to be in line with what Value Act is looking for as well.
Are we expecting potentially to hear much else aside from cost cutting at that event coming up? I mean, are they looking to get more aggressive on pricing? It seems like the model for success has always been somewhat Netflix in terms of being able to try to get pricing.
Boyle's breaking out.
Spotify is they need to make sure that you have no reason to ever drop the service, right? So if you're watching Netflix, you might watch for your favorite show, and then if there isn't enough content for you to watch, you might drop the service until another favorite show launches a new season. The thing about Spotify is that music in many ways is treated as utility. People want it all the time. They listen to the same songs over and over. Spotify has tried to expand by having this big investment in podcasts, which seems to have really paid off. But also now they've talked about expanding into audiobooks. So that's the next frontier for them. And Daniel Ek hinted at there being other major verticals down the line, which is a similar monetizable opportunity. So I think the question is whether we get more granular information in their strategy around podcasts, as well as this newer area of audiobooks, and then what else we learn about future verticals down the line.
All right, we'll watch out for it. Julia, thank you very much. Barb, Spotify or anything like it appeal to you here in the content area?
Well, in the Spotify, I mean, it's up almost 60%. And obviously that's because they're initiating This almost reminds me of Amazon when for years they didn't make money and they put all their money into building a business, and that's what Spotify's doing. And so they're going to do a lot of cost cutting, but they still have competitive competition out there. And you also have the really control content. So there's bigger risks out there. So right now I wouldn't chase it. So, but I do we were talking about Expedia earlier. I think it's a great buying opportunity. 12 PE versus Booking.com is just under 20. Everything's accelerating. They're in a sweet spot for travel, online travel right now.
All right, yeah, certainly the value in that group. Barbara, great to talk to you, Barbara Duran.
All right, that's a wrap, folks.
A little bit of an uptick in the indexes here. The S&P 500 is now up a few points. Going to finish. Dow is up about 0.5%. So we are still looking at about a 1% decline in the S&P for the week. Today was more of a mixed day in terms of market breadth. You did see about half and half up versus down volume. So that's
Nice job.
That's pretty non-familiar. The VIX still going to go out above 20. They are looking at that CPI report on Tuesday. It seems like the market, as we hit the top end of the range, people bracing for a potential surprise on inflation. We're getting pretty heads up going into the weekend. The S&P still up more than 6% though year to date. That is going to do it.
All right, folks. Thanks for joining us today. Mondo, John, Steven, take care. Catwalk. B-Man, take care. Frano, Prism, Brother Bill, keep making those hearts, man. Crush, thanks for joining us. Brian, thanks for the UNH trades, among others, CNINF, Cincinnati Financial. Mikey, thanks for all your posts today. Money Magic, Dollar, Grant. Have a great evening, everyone. John Smith, Easy, thanks for the AbbVie trade today. Corey, take care. Grover, take care. Rick, take care. Joel, VMV, thanks for everything. Beagle, Mr. Young, if you're there today, have a good day. Cayman, thanks for your post today, buddy. Appreciate it. Hope everyone had a good day today. It was good. Michael Keeley, thanks for your comments earlier. Grover, Beagle, take care. All right, folks. For those of you that joined us in the evening session, Farmer Jim, take care. Farmer Jim from the West Coast. I'll see everyone. Todd, I'll see everyone on Sunday. Weekend video will be out Sunday late, about 2 p.m. or so. We'll see you then. Looks like Boyle popped at the end of the day. So did GFAI that Mondo posted. It's up at 4,300%.
I feel like, you've been pretty negative for the last many months, but I feel like you started to turn the corner a little bit and try and get a little more positive as the year ended, as we started now. Are you back to thinking that we're going to go back to the October lows, or where are you now?
No, I think we definitely have potential to come out of the fog that we've been in, all of 2022 basically, but I just want to caution investors to focus on companies that actually have businesses, right? The quality companies that are actually returning cash to shareholders, for example, right? Paying a dividend or doing buybacks, or maybe a mix of both, and not so much jumping right back to the more speculative names that aren't really doing any business. They're just stock tickers.
What's on your short list of best ideas right now?
So it's not going to be a surprise to anybody at this point because it's been the talk of the town all week. But Microsoft, I think, is actually on pace to become the most important company the rest of this decade. If we think about Apple's iPhone moment in 2007, I really think that that's possible for Microsoft with this whole OpenAI and ChatGPT generative AI component.
So you're able to separate what you would consider to be more speculative parts of tech and then some of the mega cap techs, because there's been a big question about those too, hasn't there?
Oh, for sure. I just said Microsoft, but they're the only mega cap tech that's positive this week, right? So earnings last week really took a lot of the mega cap tech names down, and folks started to turn away from them. And they said, I can go buy a Tesla or go buy a Facebook or something else and see significantly double-digit returns so far this year. Why would I own an Apple, or why would I own Amazon or whoever? Microsoft's the only positive one out of the gang, but I think still we can look at those names and say they really do business. They really are in the business of doing X, Y, or Z. I can't really justify why I might want to own the metaverse company at this point, even though Mark Zuckerberg used the word efficiency 50,000 times in his last public
But you
appearance.
still have to decide what the right price for that is. You know, if these are in your mind more legitimate, you know, businesses, more legitimate growth engines and cash generators, there's still a price to be paid that's right versus what was allegedly wrong last year. And that's why they corrected so much and why their valuations corrected too. The jury is still out, isn't it, in terms of whether those valuations have come in enough?
I don't know. You hear about this multiple compression that we're supposed to see before we actually turn the corner and the market starts to recover from the bear market of 2022. But I would argue that the thing that makes this situation so unique and tough to make that argument as strongly as you might in the past is the jobs market is so strong that we don't have to have this recession that everybody thinks that we have to have. We don't have to have this multiple compression that goes all the way back down to 15 that people think that we necessarily have to have this resurgence. We're probably already turning the corner here.
You really think that? So you think we, in terms of what, like a new economic cycle, a new bull market cycle, as some people have suggested too?
Precisely. So just statistically speaking, since 1950, right? So in recent history in the markets, the average bear market cycle lasts about 14 months. And if you think about the one outlier that was 2020, when the bear market only lasted 2 months, we're already 14 months from the November 2021 start of the bear market. That means that history is on our side. And if you also couple in there with the fact that since 1950, the same period I'm giving you, the stock market always moves 4 or 5 months on average before the economy starts to show you that things are getting better. We're already feeling some semblance of things are on the mend.
Okay, you use an interesting phrase, what's on our side, because I'm writing it down because guess what's not on our side?
Okay.
Right? The Fed.
Right.
The Fed is not on our side. And rates are moving up. I see the 10-year today at 375, we'll call it. They've already, and I wonder if that jobs report of last Friday, 1 week ago, was a bit of a near-term game changer. If it means that you're going to be dealing with a more quote-unquote hostile Fed longer than you thought.
But, okay, we have CPI next week, right? It'll tell us a lot. But the components that really matter and have gotten us here so far this year are starting to look good, right?
All right, folks, I'm out of here. Take care.